noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself.
Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Stat Man.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over-under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say, based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so small.
So crack open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Stockmans.
Morning, ladies and gentlemen. Good morning, good evening, wherever y'all are watching from. It's another Monday. Good morning, Mickey.
Hey, good morning. How do I share a stream without taking over the screen?
It's just an automatic thing Restream does.
That's weird.
Morning, everybody. Let us know, as always, if you guys are new here or you are a reoccurring viewer. Let us know where you're watching from. Let us know if you're trading NASDAQ. Let us know if you use statistics. Let us know if you are here for the first time and I am off the screen. I don't know what is happening now. What is happening?
I broke it.
I promise I'm not hitting anything.
It was me.
Let me see here. I think I'm on.
I tried putting your screen back on. I think we might have to turn our cameras back on, maybe. I don't know. I'll stop touching stuff.
Oh,
I need an adult.
I'm trying to figure out how to get our faces back on here. Let me see. There we go.
And then you just have to take the screen in.
Boom.
There we go.
Crisis averted.
Ta-da!
We're trying to get more professional, guys. I swear. We need a producer. If you guys know a producer, let us know. Good morning. Good morning. I'm gonna do this quick and dirty. We got Drez, Hooge, Carl, Scotty, EP, P2B. We got Ricardo. What's up, Ricardo? Chitaki. We got Alpha, Rax, Pocket, Jeff. We got Mr. Trades by Bruno. We got Brookalino. We got Cameron, Moz King. Freaking cold here. We got Ziggy. What's up, Ziggy? We got Dark Helmet. We got Moz King. Brand new here. Doesn't even know what a candle is. I love you, Moz King. We got Cody coming in from Texas. We got Alpha Profits laughing his actual booty off. We got Time is Evercane in the boot camp, actually trading my own stats I collected, and that is amazing. We welcome everybody from all walks of trading life, new, experienced. Maybe you already have a strategy. Maybe you have never even just touched statistics before and you're already profitable. You just want to see, is there anything to adding numbers and objectivity to the things that I already do? Because what we teach is not a strategy, but just a process that you form into your own way of looking at price. Good morning, Wingo. We got Jihani, one of my pack members. I really enjoyed getting to know a little bit more last week into how you manage risk. We got Escoba back for more. We got Kuma. Good morning. Good morning. We got Vladi Myrene Kalov 27. What a username. We got Second. What's up, Second? Good morning. Good morning. Mahish. You guys like this? Is this entertaining, me trying to pronounce y'all's like crazy usernames?
Yes.
We got Steve Ford. Steve Ford. Thank you for having a very easy username. Good morning. We got Todd Trades. Good morning. And let's get into it. Mickey, I think I went first last week. You want to go first this week?
Sure, I can.
Here we go. So if you guys are new here, what we typically do is every single Monday we go live around 8:20 a.m. EST. We do a deep dive analysis just like we do on Fridays with how we view price, how we interpret price with the statistics and the tools that we use. And then on Mondays, we actually trade live on top of our analysis. So, at 9:30, that's when the market opens and we typically execute trades. And then on Fridays, we do the same thing, just we live trade over in our Discord with the pack trade group. and the boot camp members coming together for community live trade sessions. So if you are interested in what we do, you can join the boot camp right here. Website is in the top left corner with the QR code. And then if you want to learn more about what we do, there's another big, nice QR code for you to scan. Mickey, off to
First
you.
and foremost, I probably should repost this whole thing. So let me do that. All right, cool.
My bad. One more thing. I am still doing the $80 commitment. Okay. So if we get to 150 live viewers today, I will give away to one random person that likes and retweets the tweet. It's pinned in the YouTube stream. If we get to 150 live viewers, you have to be in the stream. You have to like and retweet the tweet that's pinned, and I'll give it'll trigger an $80 giveaway, and I'll just run it through a random thing that chooses somebody that randomly liked and retweeted, and I'll announce it here on stream. If you're not on stream and you don't claim it, I'll just move to the next person until somebody claims it. All right, cool.
How dare you? I can't believe you said triggered.
Trigger.
I thought we agreed never to use that. I'm just kidding. All right, so starting on the daily chart, right? Like, we're going to take what we did on Friday and what we did on Thursday, and we're going to get the probabilities on the daily chart of, is the high day, lower day, where the highest probable reversal zone is for the high day, low day, are going to be. So we're going to come over to our candle science, and we're going to import, and I've already done that, right? Input what Thursday did, what Friday did, and what has happened so far. That gives us probabilities of what we've done. Now, the one thing I'll tell you is that just using the 3 candle situation on NQ on the daily, we started with 3,680 days, right? Just us having a red day on day 1, closing above the high on day 2, being green, breaching Friday's opening price. That has only happened out of 3,400 and whatever days, 20 years worth of data. That's only happened 62 times. And out of that 62 times, that previous day high still had a 65% probability of us taking that out over the 56% probability of us taking out the low. Now, if you use candle science enough, you'll see that like these numbers, the spread between the previous day high versus low is very tight, right? So we will have to lean heavier on our intraday statistics than to rely on this, because like that spread is so close together. But, you know, needless to say, they both have 56 to 65, right? And so now if we look at where can we target if it takes out previous day high, and I've already done, right? We know that above Friday's high day, right, if we measure 15 basis points from that high, so this is the previous day high, this yellow line is representing that. This would represent the 30th percentile. So out of that 62 times that we've done exactly what we've done, like the 30th percentile for reversals was 0.15 of the previous day high, and the 50% reversal zone is 0.27, and the 70th percentile zone is 0.36. If we check out the statistics on the low, same concept. We don't need the previous day wick, right? It's the same thing. We can see the 30th percentile for the low to get taken out is 0.32, then it goes to 0.49, and then it goes to 0.76. So we can see if we take out the low, we're more likely to move a lot farther than if we take out the high. So I've already drew them out on the charts. If we take out the previous day low, the highest possible low of the day reversal from the candle science is around previous month mid. Right? If we take out the high, the highest possible high day reversal zone is inside of previous month wick, right next to the previous month. So this price target is from 26,024 to 26,058, and then 26,840. So that's not even that's 25 basis points. And then for the low is 25,525, 25,487, and 25,421. So what I do is I shoot for if-then statements. First, like if we got to take out the high. Then we know that between the previous day high and this green box, that's what 30% of the time has reversed. So I target this, and then this, and then this, right? But my cash flowing target, if we take out the previous day high or low, is always the 30th percentile zone, right? Like that's my easy target. And if depending on the anomaly, whether it's the low or the high, and today we're not trying to lean too much on either side because we can see that the probabilities are, pretty tight, right? Is that median price and that 70th MFE percentile, right? All right, so moving on, we are going to come over here and look at our weekly stats, right? We know that off of the weekly, let me adjust this and I'll draw them on. This is a weekly level that we put statistics by, and this is where it jumped to this week. So we know that the 86% probability is 0.5 off of that. Well, we hit that by just the assumption of opening up, right? So and then we came down and touched it. And so that probability is accounted for. We know that the next one is 1% off of this, right? And we've hit that already, right? So now that's pretty sus because we're hitting it and that had a 78% probability. So our next probability from a weekly targeting system will be 1.5 off of this blue line, which is 26077, right? And that's got a 75% probability, right? To the downside, the only high probability target that we have is 0.50, where my green box is, and that's that's a 50-50 shot out of the last year, right? So we can see that even though so this is where knowing how to read live price is better than just relying heavily on statistics, right? You need both to be able to achieve the ultimate setting. But like right now, we're closer to this 50% probability than we are to this 75% probability. We're still below Sunday's range that we use. So, right, we know that this is higher likely to get hit because of just simple location than this, right? And which leads us to the next thing that we do, right? We want to look at what price has done, right? And is there a possibility that we might have put the low or the high of the week already in? So right now, our high of the week is at 1800. And as you can see, out of the last year, this is where our mode is to put either the high of the week or the low of the week. So if we look right here, this was Sunday's 1800 to 1900 hour. And you can see the mode was not, holy fuck. That just scared the bejesus out of me. All right. So we can see that yesterday's or last week's low of the week was Sunday, 18 to 1900. And so we did a shallow MA to MFE, right? Meaning we come up to these high probabilities. Now this week might be done in reverse. We know that there is data to support this current high a week at 1800. You can see that the false move is still the mode, right, of the weekly candle. So we're still, as the week goes by, we're not going to lock it in yet. We usually don't start doing that till Tuesday. But we are aware that that possibly could be a weekly high. Well, if that's the weekly high, there's your shallow MAE. You can even make it up to the 50% of the false move. It came down and touched 100%, 90%, and now the 80, the 60, and the 50% are still right here, right? And we can see that that's around previous week low, right? Where those 50, so the median price movement for a weekly candle, right, is currently, this is the high of the week, right, is near the previous week low, right? But we're not going to lock that in until about Wednesday, because we've got all week to figure that part out. We don't really swing trade, so it's good information to keep. It's a good guardrail and compass, just like the daily candle is, but we're intraday traders. So now moving on to the intraday chart, what we can see is that they sold Asia and they sold London, right? So now we're expecting a firecracker to the upside. And if you join the boot camp, you know what that is. And that firecracker, two zones of interest is previous day mid, Globex and settlement, and even HOU, right? And now we've seen over the last year and a half, we've seen them play the headline news event, or the headline news risk game so many times over the weekend, so many times. Sunday overnight has made extreme moves to the downside, and we recovered it the same day, if not a couple days after, right? So we can't get into the bias and the thought process that a news catalyst gets to control our downside movements. This is why we use objective data to understand that, hey, volatility is expanding, right? But we still have to stick to our systems when volatility expands, meaning we get bigger ranges, right? That might not be the time for you to increase your risk per trade, but use normal risk per trade, if not decrease. That might not be the time to shoot for those extended targets, but maybe bring those targets in a little bit and shoot for those cash flow. That's not the time to, depending on your experience level, take more trades, but to stick to your kick. This isn't the time to get cheeky with your trading as an amateur trader or as a retail trader, even as an experienced trader, right? You've got to be aware of the volatility conditions. And if you don't have playbooks for when volatility expands, for example, right, we moved 283 handles in Asia. Over the last quarter, we've only moved 135. That's your median, right? So we've doubled our range in Asia. We need to be aware of that. And yes, that's great opportunity for those who have already mastered the one kick during that time frame. But that's not the time to learn how to trade when volatility is expanding, because if you think of it, right, like the 1 minute candle, the 5 minute candles are increasing in size. That means if you're not doing a risk per trade, if you're doing a fixed position size style stop, and your stop costs you different amounts of dollars every time because you're placing it above structure highs or low, that's going to be a more expensive expense, right? These are how we fix that are some of the things that we teach in the boot camp. So we know that we have the possibility of a firecracker, the P12 mid and previous day mid, Asia OU, Globex and settlement. We're going to be using live price components to see where we're going to go up to come back down or go down to come back up. We haven't confirmed which way we're going to go. So we're going to come over to the daily profile to solve that problem, right? We went short, true, none, short, true, none. We haven't broken out. We're going to come over to the war game, and we know that just around this 730 to 830 box, it can do 4 possible things right now since we haven't broken out. It can break between now and 11:30. It can break out. This gray box is 730 to 830 box that we measured all of our statistics around. It can come up to come back down and hit the other side of that. That's scenario 1. It can go up and never make it back to this 730 to 830 low. That's scenario 2, right? It can come down to come back up. That's scenario 3. And scenario 4, it can go down and not make it to this high, which would be the 4th scenario. This is why we like to wait for the breakouts, because once we break out of the 730 to 830 range, 2 of these can get deleted. So we don't have to guess out of 4. We can actually fine tune like our trade plan down to 2 if-then statements. And so with that being said, I am going to wait before I get into this part of the analysis, and I'm going to pass it back off to you, Austin, until we break outside of this range. And then worst case scenario, if it hasn't happened by the time you're done, I'll just do all 4. Cool.
All right, man. Boom. Okay. Good morning, everybody, once again. All right. And so first thing you'll notice, so if you guys are just coming in for the first time or anything like that, first thing you'll notice is Mickey and I, we sound very similar, right? When we war game and stuff. That's because we align very well with the statistics we use. The way that we get there and the flavors and, the little nuances, some are unique to me and some are unique to Mickey. But the cool thing about trading with statistics is the fact that you can literally come to the same conclusion, but just how you get from point A to point B can be vastly different because it's just objective numbers. So how we get to today, right? What do I look for? So the first thing that I always do, I start on the 60-minute time frame. I see number 1, where we at within the weekly candle. Okay, so it's a Sunday going into a Monday. Statistically, the first portion of any week sets a high or a low for the rest of the week. Most of the time. Does that mean it has to be this week? No. But I want to use going into Monday and Tuesday as that context to see, is there a potentiality for a wick being created on the weekly candle, and then we create the body going into the opposing way for Thursday to Friday. So going into today, I'm looking at the context of, if I turn everything off and I just want to purely see from where we're at within the weekly candle. Right now we have a weekly high on a Sunday and we have a weekly low on a Monday. And so statistically that Monday is the major contributor of a higher low. So I want to see, how does this daily candle relate into the creation of a potential either low, and then we reverse to maybe make some more distribution above the weekly open? Or is this going to be a crazy bearish sell-off week where sometimes the Sunday just creates the dang near higher low of the entire week? And then I want to see, of if that scenario is possible, what could the daily candle do to be the responsible party for either the wick creation of the weekly candle or the body creation of the weekly candle? Okay. And so how do we do that? Because we as day traders, that's all we're doing. We're trading the wiggle, just like how you see this hourly candle right now. It's currently, we have 8 minutes left of this hourly candle. And right now we're watching the body do this right here. It's trying to decide, it's, you know, do I want to be bearish, or do I want to come and retest the open again and maybe try to be bullish, or do I want to be bearish, or do I want, we're doing the same thing on the daily candle as day traders. We just want to get this little wiggle. We as day traders just want to do this. Boom. All right, we're out. Like if you were to watch the daily candle as you get into a trade, we just want to go, if you're looking for shorts, you want to see the daily candle do this and then boom, wiggle, TP. Or if you're bullish, you want to see the daily candle go from here and boom, wiggle, TP. That's all we're trying to do as day traders. And so what wiggle can I come up with? What wiggle can I war game with statistics, with objective numbers of when these wiggles are made and at what time are these wiggles made? Okay, we're using some very high institutional professional terms here. When is these wiggles going to take place? All right. So then we go down to the 5-minute time frame, and I just want to look at all the statistics, all the checkpoints that the NASDAQ or whatever instrument I'm looking at can provide for the day. So first things first, where are we at within the first half of the daily candle? The first half of the daily candle is what we call the P12. And why we call it that, it's just the previous 12 hours. It's the first half of the daily candle that we're trying to trade. So it's helpful to see where we at within the high, the low, and the mid in relation to where the high and the low of day currently is. Because statistically, we make the high, just like I told you guys from a weekly perspective, the high or the low is made around Monday to Tuesday. The daily candle perspective, typically it's between four major times, and that's 1800, 3 a.m., market open, market close. So I want to see what the current high and low a day is that was made in the overnight, and how does that translate into the four major statistical times that price could lock in a wick of the daily candle, and then how do I get there to take advantage of it? So now we have a weekly high, or a daily high made at 1800. And so I would just draw this on my chart, and I would say this is an in-stat high of day. And then we have a low of day here at 340. Now, I will say this is just something you'll learn in the boot camp and with more reps. The 3 a.m. window, the 3 to 4 a.m. window of making a high or low of day, this is like the weakest. Okay, it's significant enough because there is a bit of an uptick. If you were to look at the distribution of all the hours, there is an uptick in 3 a.m., but it is the weakest of the four. So anytime I see a profile like this from the overnight where we have a really good high of day at 1800 with all statistics stacking below with this 340, I will say that it's not anything crazy, and it wouldn't shock me if this low were to be taken, because typically we will take at least one of the P12 higher lows. And so because we're below the P12 mid, because we have a high of day at 1800, this is leading me to believe, using just the process of elimination, to say, okay, if I had to choose right now, gun to my head, I would say that this low has more odds because of how low, how small the distance is from it right now. This low would have more odds than this high to be taken, because there's a lot more data and statistics backing with live price that this can be the high versus this being the low. So then I just called this right here, even though it's an in stat low in the 4 major times. Today, I'm calling this an out of stat, or we could even call it a weak statistical low, low a day. And now what Mickey was talking about with the range, I want to see how do we interact with New York 1. So New York 1 is a constant that we use to give us information of how potentially market open could, create an expansive move, a choppy move, a reversion, or an extension. And that's the range of New York 1. Okay, so the high right here and the low right here is what Mickey and I are waiting on to get a little bit more information. And I can add the daily profiler to my chart and show you guys why. Because you see these boxes on my chart. These are the high a day and low a day projections of the daily candle based on exactly what we did in the overnight session and with whatever we do with New York 1. Okay, so one thing that we have that's very interesting that I'm just keeping my eye out on today is with the tools that we use within the daily profiler. We have 3 of the 4 major scenarios, what Mickey was showing you guys with the arrows earlier. 3 of the 4 major high probable movements of the daily candle has locked in the high of day. So that's something very significant to me, because what I do is I'll look in the overnight session and see what high and low of day has statistical evidence of being locked in. And if that has statistical evidence being locked in, what would live price have to do to align with just one of those? So all I'm basically doing, if you guys are like, what the heck is this dude talking about, is I'm just basically taking different scenarios of what has happened statistically in the past, and I'm trying to fit which system would align with those scenarios. So if live price does this, then, right, thinking if live price does this, then conditionally, this is the highest probable statistic. And that's all I'm doing. It's just process of elimination. We're taking like 4 to 5 different scenarios. And then when live price does the trigger of one of those, or maybe a couple of those scenarios, now we're eliminating half of the potential outcomes. And now we're left with maybe 2 to 3, right? And all we're doing is just deducing, like what is just like any trade idea, right? You're basing a trade idea where it's kind of general at first, and then no matter how you trade, you're now just, deducing, okay, well, now price has done this, so it doesn't align with this idea. Now price has done this, and now you're making it to where it's just form fitted into just 1 or 2 specific outcomes. And that's what this range does. So we're going into New York 1. And so this high, okay, if we take this high, we would be what's called New York 1 long. Statistically, we go false more than we go true. And so if we take this high, and the current high, for those of you that like prices, 25,762.25. If we take 762 first before taking the low, which in the low would be 727 even. If we take this high first, statistically, we're going to revisit this low more than we just keep on pushing to the upside. And then we have statistical evidence because we know that this is a very weak low of day. We know that we have 1, 2, 3, 4, 5, 6, 7 different levels with like very high probabilities attached to them. And then we have a lot of opening prices still left open. So basically, this giant box of probabilities or areas where price could go, this is where, like, if we do a typical mean reversion day, this is where price could make checkpoints to. And so I'm just saying, okay, what does price have to do here to get us to here? So if we take the high first, I'm expecting, and then just bottom line up front, if we take the high first, I'm expecting mean reversion to the downside, where I would wait for 930 to open up somewhere here. And I would just wait, and I would just look for an extended cash flow short to all these statistics. The other side of the coin, if we take the low first, then I would be looking to see, does 930 net off this area where I'll take longs to the upside for the false, or does 930 break through this area to make a new in statistic low of day, and then I can long off the low of day towards all these, towards the potential false, or I can short for the continuation to the downside. So bottom line up front with the trade ideas that I'm going into today, with all the without being like super complex or anything, is just, if we take this low first, I'm going to let 930, I'm going to take cash flow shorts towards a potential new low of day. If we take the low first and break above 930, I'm going to be looking for extended cash flow longs for the P12 mid, which is 794.25. And then the flip side of the scenario, if we take the high first, which we got really close to doing, and now we're back in the middle. But if we do take the high first, I'm going to be looking for 930 to open somewhere here, and I'll be taking extended cash flow shorts to the downside. And that is perfect timing because without further ado, we have a guest trader on today, ForexIke. What's up, dude? Oh, I can see you talking. Is this a me problem? I can't hear you. Mickey, can you hear? Can you hear Ike? Check your outputs, Ike. Click that drop down arrow beside the microphone icon.
Speaking, testing.
There you go.
Hey,
There he is.
what's up, everyone? Good morning, happy Monday.
Happy
Hey,
Monday.
same to
dude.
you. Huge fan, and if you guys don't know about ForexIke, right? Like, we're huge fans of him in the pack and the daily profile. If you go through the boot camp phase 2, we teach you, like expected value, SQN, risk of ruin, consecutive losses, and like one of the assignments that we do is we go through every single hour and we build what risk profile actually, no matter what strategy, and we use like 16 different strategies to prove this concept. What strategy for individual hours, right? What is the proper risk profile that can sustain any market environment, anything out there? And the biggest aha moments that the students have is that negative R is the way to go, especially from an intraday standpoint. What flips it to a positive R is time in the market, time and space in the market, right? So people always misconceptualize what reality is with the risk to reward tool. ForexIke is one of the few other people out there, and he's a lot louder than we are, that promotes the negative R style trading. So with that being said, it's an honor to have you in here. I'm a huge fan. I really love what you're doing, and it's awesome to have you on, man.
No, thank you for having me, and also both you guys, thank you for your service. I know you guys are veterans, so definitely thank you. Really appreciate that. So.
Oh, fuck
Absolutely,
yeah, thanks, man.
Yeah.
Hey, you're in New York, right?
I'm in New York. Yeah.
What part? I mean, you don't, never mind. You can tell me later.
Yeah. I'll hit you up. But I mean, I'm on Wall Street every day. So.
Yeah, I used to. So a little bit about me. I joined the Army the day after 9/11 because of 9/11, and then when I retired, I ended up in New York City. Worked investment banking there for a little bit. But yeah, I love New York City. It's the greatest city on earth.
Yeah. It's definitely a fun, expensive spot.
Yeah.
So like you said about me, I pretty much trade negative RR, like for the most part. Like, not saying like, oh, I don't want to take a high risk reward. Of course I want that. Like, who doesn't want that? But more than I want that, I want to be consistently profitable. I want to make money more than I want to get the amazing trade, more than I want to have a sniper entry, more than I want to have an amazing screenshot. I'd rather have 50 ugly ass trades and get payouts every week than have a bunch of amazing sniper entries but never qualify for payout because I end up blowing my account or something. So like, my whole trading philosophy is really forget everything, keep it as simple as possible. Most people, when they first started trading and got into trading, did well when they didn't know anything. They knew nothing. They just said, oh, price is going up, I'm going to buy. Oh, good, I got a little profit, I'm going to take it. Oh, price is going down, I'm going to sell. Oh, I got some profit, I'm going to take it. That's what happened. Then what do people do? They're like, ooh, let me get better. Let me perfect my strategy. Let me learn more. And as soon as that starts happening, all of a sudden they can't win a trade. And at least that's how it worked in my trading journey. So I believe less is more. I dumb it down. I try to just scalp a quick 5 to 10, 12 points on NQ and call it a day and go on with my day. That's really what's behind all my trading. I've been, it's not like I'm trying something new now. Like, you can go on my Twitter. I've been on there since like 2022, posting the same exact way I'm trading. There's nothing new added, nothing crazy. It's like, that's just how I trade, and it's consistent. You can't argue with results, and that's really what I try to like explain to everyone. The negative R mafia doesn't. Yeah.
the thing you're doing, Ike, and this is why like I was really excited to have you on, is because you're not even like, you don't do a lot of statistics or anything like that. You're pure market structure, and we'll definitely get into like how you trade and stuff. But one thing that you're doing that Mickey was talking about that we've already seen in the numbers, like if you were interested in the numbers, is during the intraday of New York, like we can show you time and time again of how a negative risk to reward like system can have positive results because you're just getting that small fluctuation. And if you see my screen, this is what your portfolio basically is, because, and this is where the whole risk to reward argument is flawed, is if you look at a trade, right? Yeah, your risk to reward, and I've seen you trade, like, post your executions, it'll be like this, but the distance between your execution and your target, because the probability of that target being hit so consistently, because you've mastered this little kick so long, that your portfolio over time is doing this. It's like a temperature gauge. So your profit factor is actually like very positive. And so, yeah, when you take an expense or when your stop loss gets hit, yeah, it is going to be bigger than a singular win, but you're trading at such a rate that if you were to look at a risk to reward tool of your entire like equity curve, your account, it's actually fluctuating more in the positive side, because all of these high probable hits that you're getting is adding to your profit factor. And so your profit factor is going to be positive, right? You're a profitable trader. It's just a single snapshot of a single trade, versus on the other side of the coin, if you're somebody doing this,
right,
you're trading NASDAQ. This thing moves 50 points just by somebody opening their mouth, like, and saying the wrong thing. And you're doing this. They're doing the same thing, right? They're taking these small hits, and then 1 out of, 8 trades, they get the winner. And what does that do to their portfolio? What are they doing? They're trading a positive profit factor. And that's all it is.
It's all, and I'm always saying, I'm like, people are focused, especially in the prop firm game, people are focused on their wrong P&L. They're looking at their sim funded P&L on what they're risking, when in reality, you're buying a $50 eval, and the minimum, if you can get it to a payout, the minimum payout you can take is $100, right? So at worst, you're doubling your money. So if you want to think about negative RR, positive RR, I'm super positive RR, because I'm risking 50 USD to win minimum 100
I was about to say, the way I explain prop accounts is like, everybody knows what an option is, right? A prop account is no different than any other derivative of an underlying, right? Now, I'm not in the individual, like, let's say I take an options trade. I'm not doing the positive R, negative R of that individual option, right? And because that's essentially exactly what a prop account is. It's you're buying leverage, and it's a derivative of whatever futures assets that you're trading. People don't think of it like that. Maybe I think of it that way because I know all about derivatives and all that from my experience, but like, that's all this is. And so like, and another cool thing you said was like, you take it for 10 to 15 handles. Like, I've proven that through statistics and my own personal trading. That's got such a high hit rate across most intraday strategies. It's like, back to what he was saying, are you here to make money, or are you here to look like an egotistical, pride-based genius? Well, those we've already seen multiple times over and over again. Those kind of people don't necessarily make money, or at least they don't shout it from the top of the rooftop like they shout how great of a trader they are. You're here to make money. You're not here to look cool.
That's it.
Do anything other than make money. And so that's why I love what you're saying, man.
Yeah, I mean, look, this is a Top Step account. I have one Top Step account. It's my fart account. I try to only use it when I poop. It's a lot of one trades, as you see over here. I take a quick poop, I pull it up, I go for a quick couple points. But this is pretty much my account for pooping, instead of scrolling on TikTok. Today I took my morning poop. Already got that morning poop. But like, what I'm saying is, like, people will, when you learned about trading, you got into trading because you're like, I want to be able to do whatever I want all day. I want to be able to make money in 5-10 minutes and then have a day. What happens when people start learning about trading? They're like, oh, I really want to learn this. I want to master this. Like, as if it's a science, like as if 2 + 2 is 4 with trading. If high gets swept by 3 p.m. candle, it will automatic. Like, it's not a science. Okay. So it's like flipping a coin. I could flip a coin 30 times and you got some type of statistic from that. But if a new person comes over to me and says heads or tails, it's still 50-50 at that point. It's not. So I keep it as simple as possible. Also because I know I'm not smart, bro. Like I dropped out of college. I wasn't in college. I've always been making my way, hustling, doing this, that. You know, I'm from Brooklyn, just making a living, always hustling. And I know I'm not a smart guy. So I'm not going to trick myself into thinking I'm smart and I'm going to figure out the market, which has been around for hundreds of years with so much money behind it of people trying to crack the market code, figure out the algo, right? You think you're gonna get it? You think you're gonna go figure that out? Like, do you really think you're that smart? Like, come on, like you're not that smart. Yeah,
I say it all the time, man. Like I literally helped with the T+1 life cycle of a trade. I've sat there and asked the CEO of the NASDAQ and the S&P 500 and the New York Stock Exchange, like, does anybody really know 100% how markets are priced and the function of it all? And because it's such a grand scale. And they're like, no, are you serious? Like, do you know how many components that go into this? And that's why, like, you would never hear me talk about how market mechanics worked, or this is what I did when I was on a collateral margin desk, because it's cool bar information, but does it help you with the one thing you're here to do? Master that one kick 1,000 times, right? No, like, the cool thing about it is, like, retail traders have the ability to be way more advanced than any institutional level trader by mastering that one kick, right? They have a linear process. It's not multidimensional. It's, are you going long and short, and are you right or wrong, right? And then, like, how you do the risk profiling of that is what matters. But that whole how markets move, right? That is a silly concept. I don't understand.
That's literally what. That's why. Just to give you some context, Ike, into why we do what we do. That's what even motivated me to start using statistics and trading, is because I got tired of everybody telling me, oh, this is a high probability high. This is a high probability sweep. Sure. This is a high probability. This is the way the market moves here. And I was like, okay, then let me freaking prove it. If this is the way the market moves, right? If I were to tell you, Ike, I'm going to take my car and go get my oil changed. And if I were to say, hey, dude, the dude that changed my oil put gas in the oil, reservoir, like, would you take your car there? No, because if you know that oil goes in the engine, you're going to be right, 100% of the time. You will never be wrong because you know how that engine works, right? You know exactly where the oil is supposed to go, because that's basic mechanic 101. If you were wrong even 1% of the time, you mess up one person's engine, you would be fired. So if I knew that the market moves, I would never be wrong. If I knew that this low or this high is exactly the high or the low that the market makers are going for, I would never, ever be wrong. And that's why we speak in probabilities. That's why I was like, if this is a high or low, well, then this should be right 100%. No, it's not. And that's you'll hear me say anytime I do analysis, I'm not saying the market's going to go here. I'm not saying the market is going to go. I'm just saying if live price does this specific if-then statement, then there's an X probability. And that's what I just always want to position myself. Back to your coin flip analogy, I just want to position myself to the odds that are higher than 50-50. And if I can do that over a series of 100 trades, I'm skewing the accuracy into my favor. And then I just have to let the losers happen and just let the math do the hard part, Like that's trading and making money.
Yeah, there's a trillion ways to trade and a trillion ways to be profitable trading. Like so I like to clown on concepts as a joke. Like, but I'm not, if you're profitable, that's all that counts. So like you could be doing ICT, you could be profitable, you could be doing moon cycles, whatever the fuck. You could be doing all types of crazy ass strategies. If you're profitable, I've got nothing bad to say about what you're doing. But for me, and I think for lots of people who got into trading, because I think lots of people got into trading because they're like, hey, I'm a smart guy, I should be making money, but really I got nothing really going on and nothing cooking. Like, they feel like they should be something better than what they are. And they're like, why hasn't it happened for me? And then you see trading, you're like, I'll become an expert at trading and this will be my thing. And instead of them just trying to scalp a couple of dollars, they all of a sudden believe their mom when their mom said that they were smart. They weren't. Your mom lied to you. My mom lied to me. All moms lie. They all tell their kids they're smart. You grow up thinking you're a smart guy. You're not a smart guy. Most people not you personally, you know what I'm saying? I'm talking to the trading community. The trading community is a bunch of not smart people who think they're smart. Okay. The only people who make money are the people who realize this. So I realize I'm not smart. I'm surrounded in a chat room of people who all think they're smart. I'm like, the only thing that sets me apart is I actually know I'm not smart. So I'm not going to follow these same things that everyone follows and loses. I'm going to just say, fuck it. I'm going to do my own thing, even though everyone's telling me not to, but they're all not profitable. So it's like, that's what sets you apart, is just knowing that you're not that special. That's what makes you special, as crazy as that is. You know what I'm saying? So it's like, you know, like here,
you're limiting the fear, right? A lot of people, the biggest problem with them being profitable isn't edge or strategy. It's just they're fearful and they have this giant thing of the market's against me, but it's not. And when you reduce that fear of making it like this giant mountain to just like a small little molehill, because you're just like, dude, you're right. The market is intricate, and I'm just going to be stupid and do what I need to do to just make money. You know, like you reduce the problem. It's no longer a huge obstacle, and you can actually face it.
Yeah. I mean, my whole strategy is I don't want to know about stuff. I don't want to know yesterday's high. I don't want to know yesterday. I'm in a candle for 5 to 10, 12 points, maybe. If it's more than 12 points, because I walked away from the computer by accident and I left it running. No way I'm letting a thing where if I'm more than $150 in profit, that I'm letting it run. I just don't. I take that money.
Well, this brings a good question with what you're just saying. Some Alpha Profits in the chats asked you a very important question. What's your risk to reward when you poop?
So my poop risk reward.
What's your average R of a poop trade?
So I really this day when I lost over here, I accidentally was switching. Here I was accidentally trading micros over here. But normally I'd be risking about 550 to win 150. So you might be like, yo, that is the stupidest thing ever. You're risking 500 to win 150. Yeah, but look at this. I got 4 payouts from this account already. You've
already made like a great percentage of ROI off of
already. Like, look at this. This is stupid.
50, so $200.
If this is stupid, then call me a moron. Like, I'm happy to be stupid. I'm happy to be dumb with these stats. Look, this is over a month, right? So over a month, I took 49 trades. I lost 4 of them. So, okay, I'm stupid. Good. I got my payouts. I'll cry in all my Top Step payouts. Let me go cry on my payouts here. Okay. So I'm stupid. Who cares if I'm stupid? You think I care if somebody online says like, oh my God, that RR is crazy. You lose once, you have to take 5 days to grind back. Okay. Dude. I'll just keep getting payouts and you keep working on
people obsess more about how sexy their entry is versus how sexy the deposits are in their bank account.
Listen, this is the comment. So I was infantry the whole time, and this is the common debate between the sniper and the machine gunner. So if you don't, so we put the people who understand machine gun theory as the squad leaders of the machine gun. We put our knuckleheads who are just barrel chested dudes that can carry stuff like behind the machine gun, right? And the snipers are always these cocky little arrogant pricks who like, can y'all still hear me?
Yeah, right. Yeah, you're good.
These cocky little arrogant pricks that they knew basic math, like students trying to send them to the sniper school, and so they think they're God's gift to earth, and like they're always fighting on who's the better asset on the battlefield, and the machine gunner wins because he's like, I press the trigger for 5 seconds, 300 rounds go down range, problem solved. I'm executed. He doesn't. I don't need to think. I just do, right, and like that's it, right? And I think that's the biggest wake up call for me, because like I sat there and I engaged with hedge funds and other investment banks, and I realized like when I was going to go out and do this all on my own, I had to pull on my left ear and flush all of the knowledge out of my ass and just stop thinking I knew what I knew, right? Was going to even have any perspective of my trading. Number one, the capital that I was trading behind the collateral margin desk had every type of hedge and fire drill, so those no making mistakes. Number two, I'm not trying to accomplish the same goal. Like exactly to what you said, like the simplest way to pull money is the way you should be doing, right? And stop overcomplicating it. There's so many places out there that they overcomplicate it, even from a institutional style. And that's why you see that hedge funds, like statistically, from day of launch, usually are out of business on day 76, right? Like there's a huge stat behind that because they come in over complex in everything with the picture perfect, holy grail hedge program and strategy. They miss the forest through the trees because they're so busy staring at trees, you know?
Yeah. I mean, and that's also another pro on prop firm trading is if you do trade a negative RR where maybe one loss does wipe out 5 wins, which is fine for me. But let's just say you do that, you could take a loss on one account, switch to the next account and keep trading. So even if at the end of the day, if you have 5 funded accounts and you blow 3 of them, but 2 of them get the payout or 1 of them gets the payout, you're profitable. So sure, your Ninja Trader P&L might say you're down 12 grand on the day. But in reality, you're able to pull out $2,000 that day on a bunch of accounts that cost you $100. So it's like you got to focus on making the money, not on being the greatest trader. You know, like would I love to be a great trader? Sure. Would I love to be like LeBron James? Yeah. But guess what? I'm not going to be LeBron James. All right. So it's like I know
you don't have to be. That's the power of a retail trader. Like you don't have to be the top trader in the world. Like you can generate. I mean, you're not going to obviously make millions upon millions every year, but not everybody needs millions upon millions. Like, dude, I tell everybody this, if you can cover literally just 25 to 50% of your monthly expenses with trading, do you know how powerful that is to like 90% of the population? Like, imagine if I were just to be like, hey man, I'll cover half your bills for the month. How much like breathing room and how like at peace would you feel with yourself? Like you would already be like, oh wow, that's
when I got into trading. I have when
you can't replace that.
My daughter's 4 years old. When she was born, I'm like, all right, we got daycare coming up, diapers, all this stuff. I'm like, I got to make some extra money. And now I'm at the point with trading where I really trade for an hour or so a day. You know, I'll have the screen open and thing while I'm doing the rest of my life. I'll trade from my phone, but I'm not like an active trader. But I'll take a couple quick scalps for $500-600 in a day. Like, okay, so I'm not having these $30,000 payouts, but almost my whole like salary paycheck doesn't get touched. Like I use my my payouts to pay for all like the daycare, going out on the weekends, shit like that is all like I don't need to even touch my salary pretty much. So it's like, you know, it's an amazing thing where you can have the freedom and you're not focused on I got to make 20 grand this month. I don't need to make 20 grand this month. Like this month so far, I've already gotten 4 payouts, gotten 2 from Perdia, 2 from Top Step. So I'm probably already at like 4,500 or something like that this month. But I mean, for me, even if I stop trading now, that's great for me, bro. That covered my daycare to 4,500 a month. That's 50 grand a year, like for free. Like, who's complaining about that? Like, you feel like that's not good enough. I got to become a better version of that. Then copy trade more accounts. That's what I would say. I'd say copy trade more. But like, you know, for me, I mark up the 30-minute time frame. That's really the highest time frame I go because.
Real quick, do you want to go through and do that? Share your screen.
Yeah, sure. Let me do it.
I was gonna say that real quick because we got somebody in the chat. They said, "Is this just going to be an ego stream?"
Oh,
no.
okay.
So
All right.
If you guys, real quick, if you guys are just coming to the stream, Mick and I just did like 30-40 minutes of our analysis. So we're just waiting on our if-then statements now. So for me, I'm literally just waiting to see, do we take this higher look? Here, let me go to my screen real quick. I'll just do a recap and then I'll switch to Ike and he can break down his analysis and you guys can get his perspective on price. So I'm literally just waiting. Do we take this low? Do we take this high? And then I'm waiting for 9:30 and seeing where it opens in relation to the higher low. I'm not just going to place a trade just because we're live. Like, no, I still execute. All right, Ike, explain to us how you see price. What are you seeing specifically with today? And what would price have to do to kind of align with some trade ideas that you have?
So really, I'm as simple as can be. Price close above the range, I'm looking to go further up. It close below a range, looking to go further down. So first thing I do is I go to 30-minute. I don't want too much information. Give me 30-minute, and I'm looking to just mark up kind of wick touches and candle closures. So right around here, I'm just gonna go get this special gray tool that I use, and you see I'm kind of like looking where these candles close, you know, and I'm just making these gray lines here. You know, of course these aren't like scientifically perfect, so you give or take 5 or 3 or 4 points in either direction when you're looking to execute or get in. And I also only do market. I also only do stop orders. I don't do market orders. So I wait for price to kind of come and activate my entry. I come in second place. You know what I mean? I'm not trying to pick where it is. Now I drop down to the 5. And look, it's also it's almost going to be 9:30. So obviously I'm not going to be acting on any original candle, but really what I'm looking for at this point is if I can have a candle close down here, I'm going to look for the next candle to kind of make a
what price is that, Ike, for the people just listening?
I'm sorry?
Just for the people, because sometimes we got people listening that they're not like actively
okay, gotcha.
What price level needs to be.
So you see these gray lines are the support and resistance I marked up. So I've got one right here at 727. If
Okay.
if this candle closes below here, then the next candle gives a little retest of my support turning resistance, or the other way around. I'll put a sell stop right below it, something like that. Let's say,
Okay.
kind of like where I'm looking at highs as almost like where to put my stop loss, and lows on where to take my profit. Now, look, I'm not taking this trade. Of course, it's almost 9:30, and it didn't really close below enough for me. But this is kind of like the style of what I'm looking for in a trade. So
Now,
I would have
does
like a sell
9:30
stop.
influence you at all? Like when you're looking at 9:30?
I just stay back. I just stay out of it.
Okay.
You know, because like,
Okay.
look, you can hit a home run at 9:30. You can strike out. You can blow your account at 9:30. It's not worth it. You know, I'm looking to hit it and quit it. I want a quick 150, 200 bucks per account and go on with my day. Like, so I'm not looking to blow my account. I'm not looking to hit a home run with my account. I'm just looking at.
I like that. You're basically trading the continuation. So you're not taking the breakout. You're trading the continuation, because your stop order is there that, hey, if we do break out of that range and continue, your stop order is in the continuation. Then you're just taking a high probable price movement of the confirmation of the continuation.
Exactly. Yeah, I go with price. That's why I always have the stop orders. I'm not trying to guess that, like, oh, this is probably the highest price, so now's a good time to sell, or this is the lowest price, so it's a good time to buy. I'm like, let it start selling, and I'll join in. I'll follow price. I'm not leading price. I'm following along with it.
I think
I
that's
like that.
worst things that like young traders think they have to get the bottom tick and the top tick, and when in reality, anybody who's been in the markets long enough to say, hey man, go with the fight, stop fighting the momentum, get that meat in the middle. We all like fat girls, right? Like in the dark, our friends don't know, so like enjoy the meat in the middle, you know?
Exactly. Yeah, no, and it's like, why do you need to top tick and bottom tick just because you want to feel good? Like, get a payout. That feels good. You don't need a top tick. You don't need a bottom tick. You just need a few $100 and call it a day. You don't need to show off to anybody, bunch of dudes on the internet. You don't need to show them how great of an entry you took. Like, no one really cares. Like
Oh my
the
gosh,
only
I
thing
say
that
that
matters-
Yep, I say that all the time. I'm like, nobody really cares if you make money, you don't make money. If you're the best trader on earth, the only people that care that you make money is your wife, your ex-wife, and your kids. That's it.
Right.
And the IRS. Don't forget those
And
greedy
IRS,
assholes.
So, I mean, so this is like an example of the trade I would have taken if, let's say, it was like 10:15 or 9:45 or 8:10, you know, something like.
Well, that was going to be my next question, is like, when is your, like start time of typically when you engage? Like, I know you trade when you poop, but when is like your bread and butter window of execution?
So I don't have a bread and butter window, but I'll trade anywhere from like 7 a.m. to like 8:50, let's say, and then I'll start trading again maybe like 9:40 or so, you know. So I give it like that 40 minutes around the market open time, and I wait for candles to kind of settle down a bit before I start jumping in, because, like, well, you know, it's almost 9:30 now. That's why this candle's going crazy. But you know, it's but that's an example of like the trade I would take. And let's see how much in profit did that go. Yeah, went 5 points.
So are you trading like minis? Like, what's
minis,
your position?
Yeah, because I'm in and out, man. I don't want a micro. If I'm trying to make $150, I better have a few micros, and I got to go if I have a mini,
you got to go longer. You got to go farther in price. Yeah, you got to go farther, and you got to be in the trade longer. So, like, what is that, like 1 to 2 minis, like, or
1 to 2 minis?
Like,
yeah. So I'll often base my stops like around like where I see a bunch of rejections like this. So I see a bunch of rejections. I expect price to always do that, to keep doing that until it doesn't. So, like, for instance, over here, I see price. If price was on top, it comes down here. It looks like this way, it pushes it back up, right? Up here, it looks like price pushes down if you come up here. So I'll kind of base my rejection, my stop losses where I see a lot of rejections happening. But I like to also get into entries at places like that, where if I see, if I'm expecting rejections here, like I always am, if price comes above here, I'll put a sell stop below. So if price does retrace and end up doing what all these other candles do, I'll be part of that move too. So that's another move I would do, is if we break above a bunch of rejections, I'll try to get in, anticipating it to keep rejecting. You know, like, price is going up, I expect it to keep going up. If it's going down, I expect it to keep going down. I'm not assuming I'm picking the exact moment where it's going to turn around. You know, like, I don't need to do that.
So there's a couple of questions in the chat, and I'm telling you,
Sure.
like, it's a great question. Like when you become consistently profitable, like, you have this air and confidence about you, and you should bet on yourself, because who else is going to bet on you? And they want to know, are you ever going public, Discord, anything like that?
So I wouldn't.
We're going to hold our hands to it.
Yeah, I wouldn't do a Discord just because that is real time and commitment, and the whole point of my trading is so I don't need to give anyone time or commitment. It's so I can have extra money and to do what I want. So, I think that if you want to run a community, you really have to put effort and time into it, which I just can't.
Yeah, it's holy cow, 9:30's open.
We got a pop over here. Yep.
All right, guys, we did go false for New York 1. So I think I'm the one sharing the screen. So just removing all of them except for the false. And so now I'm basically seeing, okay, going into 9:30, if we break to the downside, this is where the majority, the meat and potatoes, the statistics lie. So if we break below 9:30, I'll be looking for an extended cash flow short for a potential new low of day. If we break above 9:30, I'm going to be trading for Asia OU retracement at 9:05 even.
Yeah, so usually now at 9:30, something like this, I'm just kind of watching price. I'm often having to remake my support and resistance, because especially when you get a crazy candle like this, I'll have to redraw my support and resistance, and then I'm just waiting for kind of the market to show me something, to give me that little that move, a little hint that it's going to keep going one way or the other.
Absolutely, man.
See, I do like this
seconds left here if we close and taking this long.
You're looking for a long?
Yeah, if we get a close here. So one thing that I do, Ike, is, and you may like this because it is kind of, sometimes it's negative or sometimes it's positive. It just really depends. So I'm going to wait for a pullback here now because that breakout candle was way too big. I can't define my risk here. So what I do is when we get 1 minute closures above and below the high and the low of the first 9:30 to 9:31 range, if you see my screen here, this is like the scalps that you take. This is the cash flow move. This is like your super consistent move. So this is the median. So this is at median. We're going to get here once we break above. And look, we just hit it right there, 10 basis points. But the only reason I couldn't get into this position is I always ask myself, can I still define my risk with a positive expectancy? And this right here.
Real quick. I'm going.
What's up?
I'm trading Russell today. I just put on a position of Russell.
Okay.
Going long, trying to get that fall scenario. Stops below the 9:30. That is worth, setting it right now. That is worth $4.95. All right. So I'll be covering the queen at 10.
You guys trade swaps, or you're trading personal, or what do you guys trade?
We trade both, but we don't trade our personal as like intraday, right? Like we're doing dividends and ETFs and stuff. Gotcha. Like there's no, as long as props around, it doesn't make sense to.
Yeah.
It's just such a good ROI, dude. Like can I trade a personal account, and do I? Yes, from time to time. I'd say 70 to 80% of all my executions are for prop. It's just, you get such a better ROI for your money. And again, just like you said, like, we're here to make money. And think of this like a business. If I can risk $150, so you do an activation fee of 150 plus 50, I get one payout and I have 200 to 300% my return. If I do,
I just got stopped. Yep. Okay. There's a screenshot. $4.95 gone.
I'm still waiting.
All right. Oh man, NASDAQ, what are you doing?
And Ike, feel free to interrupt us or anything if you get into a position or you're looking for something to line
will do.
up.
I'd probably say I'm going to be waiting at least till like 9:40, especially when I see a big ass candle like this, And a thing for everyone, when you see a candle like this, some people, especially if you're new to trading, you start getting FOMO, like, oh my God, such a big move, I could have caught that, blah blah blah. But I'm like, the market always balances itself. So you mark out a candle like this, I'm telling you, later today or this week, but there's going to be a time where you're going to get a big move going down the same way.
Dude, you have a lot of traders.
And you keep it on your radar, and all of a sudden you see price all of a sudden coming back into this, rejecting and moving back down, you'll see a big kind of retracement just like this, which you can catch. So, you know, don't get FOMO, just keep your eyes open. Yeah. Let market get excited. Be like, okay, cool. This is a big move up. There's going to be a big move down in the future. So I'm just going to mark this out, keep that in my mind. And, you know, that's why I always, before I get in the trade, I scroll back. I go see what else what happened before. But, you know, big moves equal big moves, you know?
We have a lot of traders that, like, they've tried the 9:30 trade and it's like, you know, they didn't like it. And so they waited for 10, 11, 12 o'clock, 1 o'clock, 2 o'clock, because like the market's calmed down from a volatility state. And like, that was more fitting for them. Right. Because like they're trying to shoot for high probabilities moves like you, like 5-10 basis points, which is around 10 to 15 handles for 5 basis points. Right now it's 13 in today's market. Right. And it's like, dude, like, why inject if you're just shooting for cash flowing targets? There's no reason to like inject this kind of volatility into your trading, you know?
Yeah. Yeah. If you're not in like like you should never be in a rush when you're trading. But like, there's no reason to try to catch every candle. You want to make a few $100s, copy trading it to 10, 12, 15 accounts, whatever it is, and call it a day. You know, I've got a bunch of, 20 Apex accounts. I got Tradeify accounts. But what I normally do is I trade them in groups of 4 or 5, So even if I have a bad day on, let's say, a group of 4 or 5, my other 15 to 20 accounts should all be, they should all be in the money. So it's like, I'm looking at the net, I'm always focused on the payouts. I know people say like, focus on the process, not the money. Bro, I'm in this for the money. I'm not in this for the process. Like, I'm going to focus on getting my payouts. I will scalp the fuck.
If you think about it, you're doing the same process every single day. Yeah. Like, it's not like you're like, today I'm going to draw my little support and resistance zones here. And tomorrow I'm going to use a 33-minute chart and do it here. And the next day I'll use, if the moon is 43 degrees off of Mars, I will do, like, you're not doing it. You have a process.
Your way of executing is the same. And if you keep the same way of executing, the same way of any business, I tell people, like, if you were to have a brick and mortar business and every day you choose how you just feel to open up that business, you're not going to have a consistent customer, right? Like, they're never going to know when you're open. So you're still doing the same thing. Like, you're saying, hey, I'm going to trade within this time roughly, but however I trade within this time, it's going to be off of these rules, the 30-minute candles, and then I go down to whatever lower time frame you care about, and then you're trading the continuation of the breakout. So you have a consistent execution. You're just not caring so much about the nuances of it because you're just purely focused on the execution that does what creates payouts.
Yeah, exactly. And that's also why I try to not, because of because I'm scalping, I try not to get any type of bias on the day, because who cares what the daily bias is if you're in and out in a 5-minute candle? It's like saying, I want to
tell people all the time, dude, bias is goofy.
I mean, like if you want to study like
we're talking about NASDAQ.
Right, your NASDAQ. There's no the bias changes every 30 seconds. Like, it's like but it's like, if you're trying to study something small, like, you don't need to go zoom all the way out to get an understanding of that small thing. You know what I'm saying? It's like, I'm like, give me the 30 minutes. Sometimes I'll drop to a 1 hour or 4 hour to find like a target. Like, if I see like some type of low or wick, I might drop to a 1 hour or 4 hour just as like something to aim for or to look out for. But I mean, as far as like when I'm marking up my charts, 30 minutes down to the 5, sometimes I'll drop to a 1 to get in. But it's like that's as far as it goes for me. And it's like, I don't want to, like, I know it might be controversial to like not better yourself, but I believe if you make it to payouts where you're consistently profitable, stop bettering yourself. You made it to the promised land.
I tell people, like, whatever you're trying to do, there's a level of proficiency that you're trying to achieve, right? You've already got from the unfamiliar to the familiar and the familiar to the proficient, and you're in the mastery zone. Why would you change if you've already hit the level of proficiency you're at? You've already accomplished goals. Like, you don't see Walmart changing their business plans every 10 years. You don't see Apple. Like, you see, like, none of these, there's no sense in like trying to do that, right? Like, if anything, if you want to get better, like, and it sounds like you're at the point where you don't need to do that. Your job is to show up every day and do the same thing and make your money and be happy with it, right? Like, there's no need to, that's what screws people, is they can't get through a consecutive loss period but they can't go through a maximum drawdown area, and they say they use the excuse, I'm going to go improve myself, when in reality they'll just strategy hop. And if you do that too many times, that's where the over trading comes in, because you know all these strategies, and that's where the emotions start taking place, when it's like, it's silly. Like, if they had just learned how to take a loss to begin with, they'd still be on the same strategy they started with.
Yeah.
Right? It's that simple.
And that's why you always got to look out when you see people selling some type of course or something online, when they're every few months they're dropping a new version of it. It's like there can't be that many new versions of it unless you're just trying to sell something. It's like, once you find that profitable thing, like, why would you be switching it? Like, why? It doesn't make any sense, you know?
You don't. That's the hardest thing. Like, so I teach more of a quantitative way of looking at this and how to use the software and all that. Yeah.
I just want to give you guys an update. So now that we're extending off of 930, I'm just going to be waiting for 945. So if we get a high and the low at 945 and we break above it for this Asia OU, I will try for a long continuation off of that. If we break below 945, I'll be waiting for just a close below 930 for a short to the downside. So 945 is going to be my next, just point of, if we break above it, I'm going to try for it, and Asia is still open, I'm going to try for a long towards the new high of day. If we break below it, I'll just be patient and wait for a break below 930. Just give you guys an update.
Going back to what you were saying though. Yeah, going back to what you were saying though, like, so I do a 3-month boot camp, right? That's how you have to get into the pack, right? The phase 1, right? Like, I teach you how to read a live market and how to do it in a statistical way. Then we teach you how to read statistics. Then we teach you how to do a repeatable workflow. Then we teach you risk profiling, like and that's where we prove that negative R is better than positive R, and based off the time horizon that you trade in. We show them that. We make them do exercises to prove it to them, like, with statistics. And then, like, about a month and a half, right, they build the business plan, how they're going to trade, because I don't believe that you should be following what other people are doing. You have your own experience in life. You're going to have your own aha moments. What works for me might not work for Ike. What works for Ike might not work for me. There's 1,000 ways to skin the cat. Your job is to figure out which one that you can be the most disciplined with and show up every day and do it and get that level of conviction, right? And then, like I never have changed, like, the curriculum of my boot camp, right? And, like, by month 1 and a half, like, I've already gone through all the instructions, and, like, all right, now we do the same thing over and over again. After you build your trade plan, after you build your business plan, you're going to spend the next month and a half doing the same thing. And that blows their mind. I'm done teaching you. I have nothing else to teach you. Your job is to just sit here and do the same thing and get comfortable doing the same thing. And it blows their mind that, like, oh, that's it?
Yeah.
Oh, wow.
Because in your head you're taught it shouldn't be that simple. Like, it can't be that simple. You can't just make money by, like, buying and riding it 5, 6, 7 points and close a trade. That's not the right way to do it. You can't do it that way.
No, you got to read price, Ike. You got to be able to read the matrix and decipher the zeros and ones. You have to be one with the makers.
That's more fun to do. You know what I'm saying? Like, so, like, see here, I would have loved to get into a buy over here, except you see this candle closed right at my resistance. If this was, like, a little lower, if I had it kind of like this, I would have loved to do a buy on the break. But I'm marked up over here. I'm just gonna wait for a candle to close above here. Like, I might take 2 or 3 trades in a day, but I might make 14 orders and end up canceling 10 or 11 of them because price just doesn't activate it. But most of those would have been losses if I would have just market entered. So it's like my sell stops are really like protection, so I don't get too crazy and jump too quick. You know what I mean? But I do like price to head up to, like, the 25, 9, 10 levels. I see a lot of rejections there. So it's like, I do like price to go up there, but not enough for me to just get into a market order here, So that's why I'm sitting there waiting. I don't mind missing out on trades. I don't feel like I have to go take a trade now. It's like, when I see it, I'm going to get into it. And until then, I'm going to wait, keep marking stuff up and go from there, but.
Yeah. Going back to the whole reading the tape and constant education, right? Like, you're in a market, and I've done the Monte Carlos of it, of all the possible scenarios, and using historical data and future data, like derivative data. The NASDAQ can do 25,000 different wiggles between 930 and 1600 on the 5-minute chart, right? And so like, there's a lot of uncertainty, right? And people can't stick to one thing because they're not used to uncertainty, right? I think that's why veterans have a better chance at trading. I've seen it so many times. And
They
one,
want to
the
be
discipline.
perfect.
Number two, they know how to do war games. Like they know how to build playbooks. If then, I'm going to do that, right? The most one is that they are so used to this is the plan, and the first time a bullet goes down range or a variable gets thrown that wasn't part of the plan, if you just don't perform, like that's not going to be good, right?
Yeah.
And so you have to adjust, right? And that level of uncertainty injects itself into the markets, and I think that's why, like, we somewhat do really decent in the markets because we're used to uncertainty and making decisions and not like thinking about the now, but the second and third order effects. That's why I can sit on my hands and just drool on myself. And then when that time comes and it aligns, I'll take the shot and it will hit and I'll move on, or I'll take the shot, it'll get stopped out and I'll move on.
You can only win or lose, you know, like that's
Yeah.
that's the only thing that can happen. So if you just accept the fact that you're going to lose, like, bro, we're just taking risk. Just you're going to lose. But if you can literally be on the right side of probabilities over 50% of the time, you're good, dude. Like you got some edge. Now just let risk management do its thing.
I'm going to get into a buy. I put in a buy stop over here.
Okay, I'll go
if
here.
this candle flips, you know, I like how it's kind of like testing the rejection, and as long as but you see, I have the buy stop, so I'm not in this trade yet. If this closes below, I'm going to cancel this trade.
Mm-hmm.
But for right now, I'm going to let this in here. Wicks always get filled on NQ. You know, you see it all day where all these wicks end up getting filled. And so I like this wick to get filled over here and then maybe all the way up to here. But really, once I'm about $200 in profit on this, if I get up there, I'm going to move my stops into, I'm going to trail my stops. I trail my stops. I don't mind getting stopped out and then price going into profit. I don't mind that. But, you know, so this is one Apex PA I'm trading right now. So this is a funded Apex account. Just doing one now. I'm not copy trading today on stream right now, but I see what happens here. And that's my thought process behind here. We closed above range, tested
I love it.
the support, dropped down, tested again, didn't close below, and now looking for it to fill price all the way back up. Now, of course, could happen, could not happen, doesn't make a difference. But
and you don't trade statistics, but we're very similar.
Yeah.
We're very similar in what we're looking for. I'm going to go to my screen real quick, and this is the 945 high and low. So for us, if we get above 945, and it's literally just the high and the low of that 1 minute candle, then this is giving me signs that live price is agreeing for continuations to a potential new high of day. If we get below 945, then this is like my no man's land area, and this is just confirming that maybe we suck back into 930, and then I could take the shorts if we confirm down here. So it's very similar to literally what you're saying. Like your invalidation is roughly my invalidation of us failing to go higher, but if we get a close above here, I will join you in the longs. I'm just waiting for a closure now.
Yeah, I mean, you know, lots of these trades, it's the same trade, different language for it. You know what I mean? It's like someone sees a fair value gap, I see a closure above, you know, wick rejections. It's really all the same stuff here.
Yes, sir. What you got, Mickey?
So I'm just looking at Russell right now, so I'm still waiting for it to go short false, right? Like right now, the one thing I noticed is from a statistical standpoint, right? The NASDAQ shows that, right, over the last year on a Monday during this time, we typically put the false move of the next 12 hours in between 9:30 and 10 o'clock, right? Like this is the data that shows the wick of a candle. And so right now I'm just being a little bit more patient because I've missed the 9:30 trade because I usually take a 9:30 and 9:45. And so like, I'm waiting to see, is this going to go up just to flip to come back down, right? Because like if you take an open, high, low, close candle.
I just took $240 off the table right there.
Lovely.
Boom.
And
Good
that's
trade,
it.
dude.
like, you might call, so that's what, 10 points. Yeah. I got in at 54.
Mhm.
I got out at 65.5. So quick 10, 11 points. And, on a normal day, I'd probably have copy traded this on 5, 6 points, 5, 6 accounts, $240 each. I'm chilling right now. You know what I mean? I'm like, that's a grand, like,
Yeah, exactly. So I'm just waiting to see. I'll probably wait until the 10 o'clock hour unless we come back down for NASDAQ. For Russell, I take this breakout and
All right, I'm
one
taking
minute.
this long.
So I take this 9:30 breakout right here, and I'm just waiting for the queen to get covered. So I'll take 3 off, and then it'll reduce my 650, and I'll let the rest run because we're set up for a DWP style day because there's only 4 classifications that the arrows can do, and we're setting up for that DWP style on all of it, right? So I'm waiting to
All
get
right,
covered
cash
on
flowed 4
Russell.
off.
All right, I just cash flowed 3 off, and I'm in runners now.
nice.
So
I
now
got one more micro right under settlement, and then I'm gonna let the rest one ride for new hive day if we do a 3-hour line.
See, before I was saying about the wick rejections near 25, 9, 10, and that's kind of where we went up to. So right around here, this wick rejection area from like 907 to like 917 to me is something that I would watch because I could see price turning around over here the way it did last night. Every time price came to this area, it ended up rejecting down. So I know last night there was also news about that the Fed. So different deal, but that right now I'd be like, I'm watching now for a possible short, but I'm just sitting back seeing what's going on.
Yeah, come back to my screen real quick.
Yeah, I'm trying. I'm flipping to everybody. Everything's we got a lot of action going on.
Got a lot of action going.
So this is the typical 9:30 breakout trade, right? The 9:45 that we always talk about. So like I took this on the Russell right here for 5 contracts, risking 650, the max extension, right? Covered the queen at 9 basis point, took 3 off, right? So now that trade is worth 260, and I've already collected cash flow, and so this is a completely risk-free trade, so it can go to America and back, and I'll be fine. All right, I'll leave it alone until 10 o'clock. I'll either get stopped out or at 10 o'clock I'll add to that position.
Dope.
And it sounds like you
guys.
it just sounds like you just took the same trade with NQ for the 945. It's just Russell was close to the 930. Yep.
And I just got one more micro out, so now I just have one micro left. Risk is below 945, and this is just the runner. So I'm now completely cash flowed out of it. I'm completely paid for this position. I just need this final micro. I'm going to target previous day high because now this is just my runner. I only got one left. And so the idea, so Ike, this is another thing that we do. And again, everything I say, I love having people come on, kind of understanding your guys' perspective on price and seeing if there is any little, without being a nerd like me, and having spreadsheets, is there any value that I can give to you that maybe it could help, maybe it doesn't? So 2 things that I do. The first thing is I explained to you when we get a 1-minute candle closure above 930, above or below, we have anywhere between 0.1 to 0.3% just favorable price movement. This is your scalping Goldilocks area of just consistent favorable price movement. You could be brain dead, no analysis, anything. It's just a candle closure above or below. This is your money area. Now, I just try to take it one step further and see, okay, when we get out of that high, easy to achieve area, can I leave a couple micros on to just do the damage, right? And this is what we call a 3-hour line. So statistically, 9, 10, and 11, if you think about it like a 3-hour candle, 9 o'clock is going to most of the time be the high or the low of the next 3 hours. So if 10 o'clock takes the 9 o'clock high, that 9 o'clock low is most of the time, not all the time, most of the time going to be the significant low. And then my whole idea is now which one is going to happen. And if you look at my screen, it's either going to be the 3-hour line, which looks like this. You guys see this all the time. You may not trade the way that I do, but how many times have you seen we just make a rip off 930 and we don't look back? That's what we call a 3-hour line. We just put numbers to it. Or the other side of the coin, an apex. And an apex is we make this move up, 10 o'clock opens, and we make an A right? Where we retrace back to 930. And that's kind of like what you were saying, where you were kind of looking to see for some shorts. Now that is the higher scenario, like where we range and chop around 930. But that's what the point of, I just like to leave 1 or 2 micros on to, if we do that damage, what's that high probable price movement of this 3-hour line? And so all I do is I'm now just waiting for 10 o'clock. So the next 5 minutes, either I get stopped on this final micro, or going into 10 o'clock, I'm just going to see whatever that highest point that 9 o'clock made, which in this case, it's right here so far. So 9 o'clock high is 925.25. So I'm just going to take 0.1%, which is just the high strike rate move. No matter if we do the apex or the 3-hour line, this is just a very high strike rate movement that price will do. And then I'll put this limit order, my final exit here. But if we just get an FU candle to previous day high in the next 5-10 minutes, I'll just leave it at previous day high. And that's just a bonus on top. But if we kind of just wiggle around here and then at 10 o'clock, we take the 9 high, then I'll shift it down to this 0.1%. So that's,
and one thing I want to show you, if you guys, just to validate what Ike is saying, will you let me share screen?
Yeah,
I want you to go. I want you to go to the dailyprofiler.com, come over to the blog, right, and read the article. You don't need this. You don't need skill when math is doing the heavy lifting. And this is where we've took 20 years worth of data and over 16 strategies. And what you'll see is we did it each strategy by individual hours. Right? Individual hours, right? And what we saw, right, using different things like positive expectancy, profit factor, SQ, and all the nerdy stuff that you guys don't need to worry about. And I know Ike doesn't care about. We took different strategies like reverse strategies, green versus red, 5, 15, 30, breakout strategies, 05, hourly breakers, all this stuff. We combined them. All the risk profile, all those strategies had a risk profile that could sustain over time, and we merged them together and did some calculations. Either way, each hour, the ideal risk profile has a stop loss between 20 to 25 basis points, right? And a TP of 5 to 10 basis points. So Ike says that he takes 10 to 15 handles, right? This is why his stuff works so well, because his hit rates are in the 90s, right? Like, and like, you can read the article, see, you don't have to be a nerd like us. Like, I have my master's in statistics. So of course, by nature, I'm going to try to overcomplex shit. But why did I do that? Like, why do I have to apply stats to everything? Right? Because this is a scummy, greasy, Shark Tank, wolfy, like scammy industry, right? And so like in the beginning, it was like, you want to trust people are doing the right thing, but they don't, right? They don't absolutely do the right thing. Actually, more people do the wrong thing in this industry, and they have no character. They have no values to back up. And so like I started using my skill set of statistics to say, okay, if that is high probabilities and you won't show me the numbers, then prove it. I'll prove it with numbers, right? Or are you just a good marketer, right? And so I love like and that's one of the things that like, I didn't even know this, but like I've already proven that he has one of the most powerful strategies out there with my own data, right? He doesn't know it. He didn't know it. He had nothing to do with it, but you guys go through the boot camp and you prove it every single time, right? So 4 classes now has proven that Ike's strategy is the most profitable strategy before Ike even knew that it was profitable. This was before I even knew you, man.
Right. Well, so it's like so yeah, you got the numbers down. Me, I'm a big pothead, right? So I can't I couldn't even process that. You're like when you were saying that, I was blinking. I was like, wait, what's happening? Like my heart started beating. I was like, oh shit, what like
exactly.
So like, and you know, there was a time where I was trying to like build a bot for my strategy and stuff, and then I got deep into like stats. Like, oh, okay, I see that this time, like, see, like if I'm doing a 20-point stop loss, I'll get taken out 70%. But you know, I started going crazy into the stats, deep into it.
Yeah, you know,
and it just took me down the wrong way, because like then you're not trading the way you normally trade on oh, I like this. You're trading because of your stat tells you this, which is like,
and you're overfitting.
Yeah.
Most people who aren't backed up with the education of stats end up overfitting when they go into bot trading. And that's deadly, right? Like that's how I don't blame you.
But you see here's like, you see like my simple rejection zones. I'm just looking at the 5 minutes. I see these rejections over here and I marked it up. And look what's happening. Every time prices come in here, it is rejecting. Now, you might say that's not much of a rejection. What are you talking about? This is 9, 12 to, this is 20 points right here. That was easy to do. Like normally what I would trade is once it goes past this yellow line, the rejection, I end up putting like a sell stop, pretty much anticipating it to come back out. If it doesn't come back out and keeps going, I never get entered into it.
When you're placing your stop orders, right? Is could you break, because we have a very curious guest in the chat here. He said
Sure.
you call a guest and then we see the rest of you guys using leverage to talk about the, like, guys, this is still a live trade stream. All right. We're going to get, so any of questions you guys have, drop in the stream and we get a few down periods, but we're still going to execute live in front of y'all. So we got to, like, manage both. So now we got a little bit of downtime. Could you go a little bit more into depth of where do you, like, is it a wick or is it like a point value? Or when you say that you're putting a stop order for that continuation, could you kind of go through your thought process of like, how do you actually get that consistent placement?
Sure. So it's really, the idea is also to not think you can figure out the market, right? So I'm not guessing it's going to turn around because it touched my yellow box, but I want to be ready if it does. So here I see all these rejections. I marked this up right when I was right as this candle was going up. I'm like, where do we think we're going to? So I'm looking, here's a couple little rejections, not really that interested, nothing. Here I'm seeing a lot of traffic, you could say, right? So I'm like, okay, that looks like a place where we should have some interaction. Doesn't mean you can't throw past it, but this is like something I'm going to look at. So normally what I would do is once price would go past here, I just didn't want to do it because we just got into this trade here. I just got out in this candle. I didn't want to like get, too excited and start hopping in trades randomly. But that's what I'm looking for right here. I'm looking now, I'm expecting a pullback here. And the way I get into a trade now from what I'm looking at is if we can get price to close back below 881 on the next candle, on the break of the next candle. I buy high and I sell higher. I short low and I cover lower. I don't buy high, sell low. I'm with the trend, so it's like I wait for price to then start coming down and then I'll put in a sell stop on the break. Normally it's on the break of candles. On the break of that candle, I put a sell stop, continue price down. So right now I want price to kind of break out of this range one way or another. Like while it's in this range, unless I start seeing a bunch of wicks, which people don't like barcoding. I love barcoding. For me, it's easy money barcoding. When I see something like this over here, like I'll do this, my little yellow rejection zones. You might have seen it on my Twitter. I'll post it. I can call it like ping pong strategy pretty much. And I just end up, when price comes up here, I'll put a sell stop, ride it down, cover, get out, put a buy stop, ride it back up. Eventually you get popped, of course, but you have 5 or 6 or 10 different accounts where, let's say you do take a 12-point loss on one account, you had 6 accounts that you made 5 points on each. So you're still going to get the payout. But at a point like this, once we touch that little POI, if you want, a point of interest or whatever it is, I need to wait for kind of a closure to come. I need more candles. Like I can't, there's nothing for me to do right now until, and that's 5-minute candles. I wait on 5-minute closures. So right now there's really nothing for me to do unless I get like a closure above, closure below, and kind of see what's forming over here, So once we hit my yellow like targets, I have to like pause for a bit. So right now I'm just pretty much chilling. I'd be doing what else I'm doing for the day. I'll be looking at my phone. If I'm at the computer, I'll just have this open on the side. And I'm going to probably wait, like, what's it, 10:05, 10:03? I'd wait for a couple more candles to close probably before I can get into a trade. I know it's at least 5 minutes away before I'm in my next trade,
And you're always on the 5-minute, or do you ever on any like the 1 minute, 2 minute, anything else to execute?
I might drop to the 1 minute sometimes if I'm seeing like the 5 minutes not giving me something clear. I'll come to look at a 1 minute, like thinking like, okay, it looks like it's respecting here. This might actually not be a bad idea to put like a buy stop maybe over here if we close above. But I trust the 5 minute more. Like, so I'd be waiting for a 5 minute before getting into any trade over here. But I do go to the 1 minute sometimes just as like a little, let me see if I see something pretty much,
Right. Okay. So just to do like literally a complete overview for all of you guys listening.
Sure. Let me do
the zones are your like context of where bullish or bearish intent is, and then candle closures are your final confirmation to then boom, send it.
Yeah. So real quick on a 30-minute chart, this is how I just mark it up every day. 30-minute chart, look for like closures or wick touches. Oftentimes it's the same. Like here's closures, here's a wick touch. So I look for a few of those. They're normally anywhere between like 20 to 40 points apart, sometimes 15 points. They're not huge ranges on the 30 really. But I really just have something like this, drop down to the 5, and then I wait for my confirmations, you know, and then I wait.
Easy, dude.
It's easy.
It's easy.
It's easy. I don't try to, I like I said, I know I'm not smart. So I don't try to like tell myself, oh, let me get this extra info so I can learn more about this. And, you know, I know I don't know, you know what I'm saying? So like that's, you know, I've posted on Twitter before. I'm like, there's someone with half your IQ making 10 times the money as you are because they're too dumb to outsmart themselves, you know? And it's, that's the truth is like people get too smart and then there's a moron that's cleaning house because they're not getting their own way. And I'm not moron.
We do have a question from the chat, and guys, if you guys have questions for Ike, like anything more specific about his strategy, how he trades, what he trades, anything you guys want, that's why we do this. We do have one here. How long have you been trading, Ike?
So I started 4 years ago. January was 4 years ago. So
January just was 4 years ago.
And the first like 8 to 10 months, I wasn't profitable at all. Then I kind of got to like that place where you're not really profitable, you're not really losing, you know, you're burning an account here, you don't get a tiny payout there, but nothing like that for probably a good other 10 months. And then I took some shrooms and I had my epiphany that I'm a moron. Like as soon as I realized I was a moron, I started making money. It was when I kept trying to figure stuff out that's when I was losing. As soon as I said, I don't figure this out, I just need to go along, I need to follow, not figure. That's when I started making. That's when I became consistently profitable. Like consistent.
So what was your? Well, I always love to ask people this. What was your first intro? Like, what was your first thing in trading? Right? Because obviously you didn't start trading this way. So what was like your? Was it indicators? Was it support and resistance? Like, what was your first exposure to day trading?
Well, it was support and resistance to start with.
Okay.
But then once I learned that, I'm like, oh, let me get better at this. You know, let me learn more. Let me become a scientist at this. And that's when I fell down the wrong rabbit hole and started losing. But like my first, you know, the way I learned about day trading is like most other people who saw someone on TikTok or Instagram, clicking a few buttons on MT5 probably, made some money, and you're like, that looks like the easiest thing in the world to do. Like I could do that. And then all of a sudden you're down a rabbit hole. But so that's kind of how I started. So it's been 4 years, but a good 2.5 of those years I've been consistently profitable, payouts weekly. You know, it's you know, it's been a journey, but the main thing that woke me up was realizing that that you're not that smart and that you should just follow along. Like that was the thing that really that changed my trading, you know.
It was the shrooms. Somebody said you finally spilled the secret. It was the shrooms. It was the realization from the shroom.
I don't recommend that to anybody, you know. But
we got Forgotten Trader says, "Come on, Ike. I think they're saying $90 share a trade." So Forgotten is begging for an Ike signal so that way he can get $90.
That's the EX90 because I got that. I bought that car for my wife earlier in the year.
Oh, an EX90. That's a car. Oh, I'm not a car guy.
On my X account, so you must have seen that. Yeah, I got that for the family extra car. You know. Someone asked about if I trade Stoic method. Yeah, I do trade Stoic as a confluence to my trade. So I won't really enter a trade based off Stoic, SBS by Stoic. I don't know if you're familiar with it. But I do use it all the time as a confluence. So that's
like market structure, right? Like your
market structure, right? It's kind of like a high gets taken and a low, and you know, and but I think it's really cool at the Stoic SBS by Stoic. So anyone who hasn't messed with it, he's got like a 45-minute video on his YouTube. I strongly suggest it. It's a really, like I said, I don't use it to enter my trades or exit my trades, but I use it as a confluence to go along with what I'm already planning with my support and resistance.
We got another good question here by Trades by Bruno. They said, if you get stopped out, you try to entry again, and how many more times? How many attempts do you give a stop out?
No, oftentimes if I get stopped out, I'll either switch accounts or walk away for 5-10 minutes to get a refresh to refresh my brain, because there's so many times where like you put yourself on tilt, like where I might try to enter a trade, I'm like too late trying to set the limit or the stop order, and all of a sudden it runs in my direction. So it's like once I take an L, I'll take a step back, but chances are I won't get into the same trade idea. But keep in mind, I'm going off 5-minute candles looking for 5-10 points, so that same trade idea won't be around in 10 minutes. Price is going to be somewhere totally different. So normally when I stopped out on a trade, that trade idea is done, and let's see what else is coming. You know what I mean?
Okay, good questions, and appreciate you answering this stuff. And yeah, I think Tevin, I don't know if you just asked that, but he just explained that. Yes, he uses the Stoic method for more confluence and context.
Yeah. There's like a possible Stoic SBS kind of forming right now, but it's possible. So I usually mark those out to look at them to see if it will end up playing out that way. But you know, this is pretty much SBS. It's pretty much like a high happens, a new low, a high that breaks that previous high, and then you're looking for price to take out that low before going higher. So
gotcha. Okay.
That's pretty much his that's SBS by Stoic. So right now I would be watching it to say like, all right, if price does end up closing below here and taking this out, then let's see if let me see if price can close back about here, and then I'll take a buyout. You know what I mean? So it's like right now though, with the EMA the way it is, I really couldn't imagine price coming down here right now. But you know, that's kind of, this is how I'd be marked up. This is how my screen would be marked up right now, or how it is marked up right now. I would have it like this, and right now I'm waiting for a closure above or below the range. I'm looking for some type of direction, but you know, like I said, it's all 5-minute closures, so there's plenty of downtime between trades, and knowing like I can look at this and say chances are I'm not getting in another trade for at least 5-10 minutes unless some crazy.
You just set like alerts, like little price level alerts, and it's like if this breaks now, I can just come back to the chart, so I can keep just doing whatever.
Like, I mean to do that, but I never do that. No,
you don't. You just kind of go and check the chart.
Like, yeah, I just check the chart. You know, I've got Trading View on my phone, so and I usually trade through Trading View. So,
gotcha.
Yeah, it's like I said, like the way I trade is, most people will say like you trade like an idiot. You're trading like a moron. Like you don't.
Good. Tell them good.
Yeah. I'll say yeah.
I make money like an idiot too.
Exactly. Like that's the move. Like the smart people get popped. Like because they outsmart themselves. Like that's it. Now
you know the meme. You know, I always picture the meme of the dude with the big beer gut in the basement saying, "Actually," you see that? Actually.
Yeah. Actually, that's the right way. Yeah, I mean it's just the simplest way, because most people when they started trading also were successful at trading because they were just looking at price. They said price is going up, I'm going to buy. Price going down, I'm going to sell. And then all of a sudden, when they start learning more about trading, they start doing this. Oh, the EMA, this, that, and the other. All of a sudden now, instead of just buy, sell like they were, they're triple thinking themselves. They're missing out on the action. You know, it's simplicity is the key. You know, it's like walking. If every time you took a step, you're figuring out what angle you're walking on and the wind factor, and if the step's going to land right, or you just walk.
Yeah.
You know,
you just walk, fall, and learn from the fall, and not do the same thing again that caused you to fall.
And then you don't stop. Then you don't think about it when you walk. You're just like, all right, I'm walking here. So.
We got a question in the chat. We got a couple more questions for you, Ike. But real quick, I'm such a bad marketer, guys. I do this every single Monday now. This is like my challenge for myself to kind of build this stream a little bit more, because that's what we're trying to do here, is just show realistic trading, get guests that come on that also do the same thing and they're real. And so a way to do that without doing anything crazy is if we get 150 live viewers at any of these Monday streams, I'll give away $80. Just come into the Discord, submit a ticket if you're the winner, and I'll wise you guys $80. But we have to get to 150. We've been hovering around 125, so we need like literally 25 more viewers, and then we'll trigger it. So if you guys know any friends want to retweet, the way to get into it is it's pinned in the chat. Just like and retweet the tweet in the stream that shares the link to the stream, and then if we get to it, we'll get to it. All right, but that's the rule. We got to get to 150 viewers. We got a question here for you, Ike. What advice would you give a person who started recently trading? That's a good one.
Okay,
Always
so
like to hear
so
people's
so the
perspective from
main
this.
thing I would say is to keep it simple and don't get crazy with digging stuff in. I would say a great book that definitely helped me with like just the way I think about trading was The Best Loser Wins. So I would definitely recommend reading that book.
It's a
But the
good
main
one.
thing is to not care about like what, let's say, your guru or someone is telling you how to trade. The most important thing, you're getting into trading to make money. If you can just scalp a few, $50 things 3 times a day, like that's good money. You don't, if you're aiming for that, it's like getting into bodybuilding or working out and saying, okay, I'm going to be the next like Arnold Schwarzenegger or whatever. It's like, no, you get into bodybuilding, you want to lose weight, you run and you eat healthy. You do a little bit of working out and you eat healthy, you'll lose weight. You don't need to do, macro load, carb load, this, that, and the other. Most people will just fall off and kill themselves because of that. You keep it simple, you can make the money. You keep it simple, you can lose weight. You get complicated, you know what I'm saying? Like that's kind of, I know that advice doesn't really make sense until you're like trading, but simplicity is the key, and don't believe that it's not a science. There's no one who knows what's happening. Like, so don't believe like people who are like ICT that they program the algo and they're going to get kidnapped because they know too much. Like, there's people who believe that. Like, you shouldn't be. No one's a mentor here. We're not learning kung fu. It's like, imagine you're getting a job bartending and the bartender's like, call me your mentor. It's like, bro, you're a bartender. Like, I'm not calling you a mentor. Like, someone's helping you trade to try to make some money. It's not a mentor, bro. Like, we're learning something to make a little bit of extra cash. And that's that. If you focus on that, just making a little bit of extra cash, you will make that extra cash. If you want to focus on like, you think you're going to become the guy who figures out the market, you're going to have a long, painful road ahead of you. Like,
What we used to think, Ike, that there was a face on Mars. Do you remember that? Like years ago, there's like this shadow that a satellite image, and everybody was like, dude, there's people. And it's a scientific fact. We have this thing in our brains. I don't know the nerdy term for it. There's we find faces and see things that aren't there. Like you could see all this stuff, right? It's no different in trading. And one simple way that I can prove it, when people are like, dude, but look at this level that I drew. It reacted to the tick, right? Okay, well, watch this. Simple exercise. I'm doing this live. Watch, I could be completely wrong and look stupid. I'm going to turn on my chart here. Ike, give me a random opening price.
What, like just like
anytime.
Let's do 7:45 a.m. just for fun.
7:45 a.m. So I'm going to go to my indicator here, and I'm just going to have it draw the 7:45 opening price of every day. I'm going to turn everything else off. Watch what happens. If I wanted to prove to you that I know a strategy of how the market moves. Oh my God, Ike, yesterday, look to the tick, bro. This is where the market moves.
Yeah.
Let's look at today. Look at where we broke out from. 7:45. Look at yesterday. Look at this day. Oh my God. Look to the tick. This was 50.
I just gave ICT, Ike's candlestick theory. 7:45 opening range.
7:45 candlestick. Look, we swept the 7:45 and then we never looked back, Ike. This is the way this is where the market makers are putting their orders in.
I just dropped the secret sauce, guys. I can't believe it. But yeah, exactly. You could draw a random line on a chart and you'll see price will interact with that line. Like it will. And the crazy part about trading, which is what tricks people into thinking they can figure it out, is after the move happens, you can always make it make sense. Like, it went up because I had to take the data low, and then it went back down. Oh, it went down because Asian high was over there. And like, you can always make it make sense after. And that tricks you into thinking like, then there must be a method to this or a reason for it. So I can learn this reason and then I can learn how to trade the market, because like it always makes sense after. But
what's one of the biggest motivators, right? People, sex, money, power. That's the top three that rule the world. Sex, money, power. Money is one of them here. And then power, you could argue, is the other one because it gives you it could give you financial freedom. So when you are so emotionally tied to this thing, you're going to believe it. Why wouldn't you? You're like, dude, it's going to make me money. I have to believe that it's going to do that.
Yeah. See here, I would like to do a buy, except that of these wick rejection zones I see here. Just because I see how much of these, every time price comes up here, it kind of flips down. I wouldn't do a buy, but normally I might do a buy like right on the flip of that candle. kind of like have my stop loss near the EMA and looking for it to kind of fill this wick over here. But just because of all of these rejections here, I'm going to stay out of it. Like, I don't mind missing out on 20 winning trades in a day. I really don't mind. I just want to have a couple winning trades. Like, I don't care.
Dude, you had a really good trade at the beginning.
Yeah, I caught that quick 11 points or whatever. And you know, I wasn't copy trading today just because, you know, I don't normally live stream. So I didn't want to like blow a bunch of accounts online because I'm like trading a little differently, let's say. So I'm like, let me just do one account at a time. But normally that would have been 5 accounts traded, $240 on that. And, you know, I'm up $1,200 on the day on like that.
And listen, dude, if you came on stream and you didn't take a single trade, I would like,
sure,
we're here to trade, right? Like we're here to like, and what did I tell you even before we came on stream? I was like, dude, trade exactly
how you trade. Yeah.
We're not sitting here doing a competition. We're not like every 30 minutes, we got to go long or short. You got to make a decision. No, like we're here to show realistic trading.
Oh yeah, this is pretty much the support and resistance. You know, it's not as exciting like as if you're trading a 1 minute or something like that. It's not that much fun, but it's great to have on the side while you're doing whatever else you're doing in life and enjoying life, and say, hey, look, I had a great time on my day today, and I made $300. Like, there's nothing wrong with making $300 extra a day for clicking a button on your phone. Like, you know, like you're not in competition with like Jade Cap or someone who's trying to make, you know, $200K a day. You're not dealing with that, you know?
I think that's the single-handedly biggest trap that young traders, sorry, I had to leave and get breakfast, but now I'm back. They think the more time spent behind the chart, the more profitable you're going to be. In reality, like, why are you even in the markets? In 40 years, we're all going to be dead or on a deathbed. Like, do you really want to spend majority of your time looking at these silly charts? No, you want to come in, do your business, and leave, and go enjoy your life.
Yeah, I think it's just because a lot of people, especially in the trading space, want to feel good at something. They want to feel like, I'm good at this. I'm an expert at this. Yeah. Like, look, mom, dad, like, look what I can do. Like, look, I can understand the market. I can prove where it's going and blah, blah. Like, you want to feel that way. And I get why people want to feel that way, but like, you're lying to yourself. You know what I mean? So It's like, get over that part of trying to be good at the market, become good at getting payouts, and you can have a fucking great life, man. Like, it's like, hey, you just got to focus on, you know, don't try to be a genius, you know?
A lot of them like to blame trading psychology on it. Like, and I'll keep my comments to myself on what I think trading psychology is. I think there's components of it, but what are your thoughts on this whole whirlwind of all losses come down to trading psychology and everything, all the heat that it's getting?
Well, I think that the psychology does come in the fact on like giving you the confidence to enter without stuttering and missing your entry, or also knowing when to get out without like having to wait for your stop to hit stop loss if you're in a losing trade. You know, like if I start seeing my price isn't working the way I want it to, I'll move my stop closer so I just take less of a risk. Like, so I think like this psychology could help you with confidence, but once you kind of have an idea of your trading, like, then you just got to keep it as simple as, you know, you got to dumb it down. You know, you got to dumb it down, and that's the secret. No one wants to dumb it down because everyone wants to be smart.
Yeah, and like, I think I see a lot of, you know, like, excuses, and not like it was my fault, you know, in the trading space. It's like there's always an excuse why it didn't work, or trying to solve for X. And like, in reality, it's like, dude, you just messed it up, or you over leveraged, or you didn't stick to your plan, or your plan was to get stopped out and for you to take a loss, because that's part of the plan too, you know?
Yeah, and it's the market. The market, you're not in control of the market. You know, you're taking a shot, you're doing the best you can do on your call and whatever it is. But I mean, sometimes price, you could do everything right and still take an L. Like, it doesn't mean that you didn't do anything right or wrong. You know, it's just, you know, the market's going to do what the market's going to do all the time. Like, it's not going to change because your stop loss is at a certain place, or you take profits at a certain place, or because you're this far away from passing your eval. The market is just going to do exactly what it would do, whether or not you're in it or not, you know?
Mm-hmm. Hey guys, real quick, I just want to give everybody an update that's maybe not watching, but just listening. So I'm moving my stop here to 0.07% off my entry. So now, and the reason why is if we suck back into what we call the 05 box, it's going to probably be kind of a doji 10 o'clock hourly candle. And so I don't really want to expose any more risk in this trade. So my TP is at 944.75. And again, this is just the high strike rate move. And look, actually price just did it. So 10 o'clock took the 9 a.m. high. So now the high strike rate portion, if I'm right or wrong, and this is what I like to call Ike making money being wrong. So my overall idea is now a potential new high of day, but I could be wrong. So how can I still make money being wrong? Well, I just want to take the high cash flow portion of if we take this high, and that's going to be right here at 06 to my TP at 08. So anywhere in this area. And so I'm just placing it right here at 944 even. So now either I'm right because we took the high of the first quarter of the 10 o'clock hour and we make a bullish hourly candle, and then my TP is just the natural path of a bullish hourly candle, or I'm wrong and we make a doji candle and I just get cut out here at 8.99, and this will be just a really good cash flow day. Yep, in profit.
Yeah, no, that's great. I mean, look, I always like the idea of, you know, piecing out with micros and leaving a runner and trailing a runner. I like
That's
the
why
idea.
I love micros, dude. You can scale out.
Right.
That's why I love
like
micros.
that idea. I really do. I just know thine self. I know who I am, and I want to be in. I want to be out. I don't want to be sitting on the trade. I don't want to trade running where I'm going to check my phone. It's like that's like, for me, I just want to like take my hit and bounce. Like, but I mean, I love watching that when someone does. Like I admire beautiful trades. Like someone gets an amazing entry and pieces out at the right time, rides it up. Like I admire that, and I think it's amazing. But I also know I can never do it. You know, I like I said, I could see LeBron slam dunk, and I could admire the way he dunks it. Dude, I'm 5'6". I'm not dunking shit. You know, I'm dunking on my quarters. like I'm not dunking shit. So I could admire it and say, hey man, look, that's great. I'll play NBA 2K and I could dunk on that. That's my way of dunking. Like I accept that. Like, you know, so same type of deal. Like I'll take my quick scalps, you know, on my poop account took 150, on my that Apex account took 240, whatever it is. It's like I'll take my scalps and I could still say, wow, that's a beautiful trade. How you played this, how you pieced in, pieced out, the entry, how long you held it. But dude, my trades, it's like high school all over. I'm in and out in like a minute, bro. You know, like I'm
yeah, I don't even think you had that trade open for a minute. I think that was like 30-40 seconds and you were Gucci.
That's it, man. I mean, like here, let me see my top step stats on how long my trades
here you go
last. Let's see. So you see, here's my trade. So under 15 seconds.
It's like the majority.
Right. 18 are under 15 seconds. And look, I got news for you. These ones that are 10 to 30 minutes, it's probably because I was in drawdown for most of that time. Like, you know, it's not because it took that long for me to make that money. You know what I'm saying? So it's like that's how I trade, you know, and it's like I know that, and I'm not trying to be someone I'm not. I'm not. All of these dips down here are also when I took money out. It's not, these aren't L's, you know, like you could, you know.
Yeah, there's just payouts. Yeah.
But yeah, like
we got a good question, Mike. Somebody Momentum says, I'm a beginner stuck in ICT. Please pull me out. I just explained how he trades.
Yeah, what do you want me to do? Come to your house and turn off your computer? Like, what can I do? Like, you know what the problem is. Trust me, every concept works. Every strategy works, but some are just so complicated, and your brain just fucks with it, where you're triple guessing yourself for everything.
Listen, I want to add to that. Some people do need to be that way. Like I want to be perfectly clear. We're not sitting here trashing ICT or anything. Yeah. Some people genuinely are wired to where they need like a very elaborate SOP, but other people, like Ike, he likes this simplicity.
I'm an idiot.
There's beauty in that. Well, it's not even that you're an idiot. I don't like negative self-talk. All right.
I mean, but I'm not the smartest.
You found your kick.
Yeah. I'm like the most easygoing guy. I don't want to stress out. I don't want to, I'm boop, boop, boop. I don't want to overcomplicate shit. Yeah. You know, I'm like your simple, like fucking Labrador retriever, bro. I'm just looking to fucking get in, get some money, go about my day, you know, once we're off this stream, of course, I'm gonna go smoke a fat one. Like that's what I do with my day. Like, this is how I like to live. Now, I know lots of people like I'm not suggesting this for anyone. I don't sell anything. I'm just sharing because I believe anyone can do it. I think if I could make $200 a day scalping one mini, anyone can make $200 a day. The problem is lots of people like, no, I don't want to do that because that's not real trading. Like you should be able to like call this, have a thing, have a target. And yeah, look, that's a beautiful thing if you can do it. And all power to anyone who's payout profitable. If they're getting payouts, some of the biggest payouts were ICT traders. Like no, but I believe those traders would be profitable no matter what strategy they traded with. I don't think they're profitable because of ICT. I think just the way that they would be profitable no matter what. I think if I learned ICT, I could be profitable doing that, but I'm not, bro, I got nothing better to do in my life than, you know what I'm saying? Like I'm already profitable. Why would I be changing things?
And we have a very important question we ask all of our guests, all right? Are you taller than me? How tall are you, Ike?
Like my license says 5'7", but that's what I wrote it. So I'm probably, you know, depending on like what size Timberlands I'm wearing that day. No, I think
you're a healthy 5'8" on a good day.
I think I'm like 5'6" I think. You know, like I'm definitely at least 5'5". All right,
Dude,
definitely.
I like to hear it.
But,
we're like the same.
Dude,
you're
my favorite person in life. Period. Like, golly, why didn't you join the army after 9/11? We would have been best friends.
Dude, no, I was working Wall Street during 9/11.
Nice.
That was crazy.
That's a good question. What do you do professionally, if you don't mind,
Sure,
or
sure.
if you don't want to answer? Like, what do you do? What did you do before trading that led you up to where you're at now?
So I work for a small like kind of family office that does convertible notes for publicly traded companies, which really just means they give a loan to a public company, and if the company can't repay it or doesn't repay it on time, we can convert that debt into stock at a discount and then sell it at the open market. So it's still kind of market related, but nothing to do with trading. It's really more like what I'm doing is like looking at these public companies, making an offer for whatever type of money it is, and you know, so that's why I'm down on Wall Street, and that's also why I can have my computer open during the day while I'm working, to keep my eye on my own trades while I'm doing real life stuff. You know what I mean?
Mm-hmm.
So
that's pretty dope.
But yeah, I've been in the market for a while. Back in 2001, I got my Series 7, Series 63. I was a stockbroker for a while, but that's also nothing to do with trading. I mean, being a stockbroker just means you're a salesman. You know, it doesn't.
Yep.
You don't even know anything. It just means you're a salesman. You got to take these tests so that you're not saying things that are illegal to say. But yeah,
I think that was one of the most fascinating things that Austin like got to view, because like I used to sit on a collateral margin desk, and I took him to the New York Stock Exchange. And it was like when he realized like the actual job of a market maker, and it's not this like all in God encompassing role. Like he was like, wow, you essentially like people put these naive thought processes to what people do, and they glorify the wrong thing. Like you don't need to glorify market maker. You don't need to glorify Wall Street. You need to like run as far. You got to realize like what you're trying to do and what they're trying to do is completely different. They're trying to make a market. They're not trading for yield.
right.
They're not trading for yield at all. Right? They're moving.
They're just balancing their book. They just need to have a balance. That's it.
If they get a fraction of a penny, they're just like, holy cow, that's crazy. You're trying to trade for yield, like simplest, easiest way, like I just showing you.
Yeah,
and kick 1,000 times.
And I've been posting all these on X for years. So it's not like, you know, a lot of times I'll post this and people will be like, wow, this negative RR, market's going to humble you soon. You'll be popped soon. I'm like, dude, scroll through my page. Go scroll. I'm not doing anything new. I'm not changing things out. I see you just got.
We've done the same. We've done the same
so I'm
thing.
just fully out.
Austin's been doing negative RR trading for like 2 years and posts every single day, every single execution. He gets the same comments, and it's like, when, bro?
Yeah, like when are you know what I was told one time, Ike? Wait until 2026 and then see if your stats. What do you guys know what the definition of fucking statistics are? Are you this retarded? Statistics are over a long period of time the same repeatable thing of in a series of data. Like if I give you numbers 1, 2, 7, 6, 9, 4, 5, and I'd say find the average of these. We learned this in first grade. Like they're not gonna break. Like you can't unless the law, the universe of how numbers work and are formulated and put together just change. Which if that does happen, I think we have bigger things to worry about than a P&L or our trading strategy. Then statistics are always going to be a universal fact. So it's like you, the market's been doing the same thing, and we can prove that with numbers. Since the electronic trading has been around, there's a high, a low, an open, a close. And however you get from point A to point B to trade that wiggle of the daily candle, if we're talking day trading, from the open, high, low, close, you can find the same move. I'm sure, Ike, if you go on TradingView and look up like 2002 price action of NQ, you could probably find the same, your market structure, find your zones, confirmation, put your stop order, and there you go.
As long as this candle's closing, I can find what I'm looking for. You know what I mean? Like, as long as, I went to the stock exchange the other day just to drop a poop there and take a trade.
I've seen that.
I got it all on my Twitter. I did step by step on my Twitter over here.
Hold on, let me share your screen.
Yeah.
There you go. Share everybody. And also make sure you shout out your socials. Like, tell people how they can follow you and stuff.
So I was heading to the stock exchange. I'm like, all right, TP1 is a poop. TP2 is getting food. TP3 is getting to the opening bell. Stop loss is if I poop my pants. So I went through the whole thing, got in there, got in, found the toilet right here, dropped poo, then found walking, found the food. Like, it was a whole saga on my X. So yeah, it's like, you don't just need to follow my X for trading stuff. I'm having fun with it all day. You know what I mean? So yeah, but it's a good toilet. It's highly recommend for anyone. Yeah, you have to.
We went there last year around October. It was a good time.
Yeah, I love it because now all the people who worked like we did somewhere in Wall Street, like, are commenting in the chats, and they're like, "Yeah, we're just pushing inventory around, like you sweep dust on a broom and stuff like that." Telling you, like, you're hearing it.
Up here.
Oh, you found it in a trade?
Let's see. I can see a little SBS by Stoic. We had a closure below the range. I got a wick fill also forming. So it's a lot of things that I kind of like.
I like it.
Let's see if I can catch a couple 100 points over here. And it's also
no, keep going.
It's also like my rejection to my rejection zones over here. There we go. Quick 45. We're not going to close out too early, but we're also definitely not going to close out too late, So this is on a different account. That first account I locked up that $225.
When you say SBS, do you mean like a short barrel shotgun?
No, it's here, I'm going to take this 150 real quick. 165 points, just like that. Points, just like that. SBS is this swing breakout strategy, I think he calls it, Stoic's SBS. And it's pretty much, it's like a high, a new low, break up that high, then looking to take out that low and fucking around a bit before going higher. But here, these are my common trades, how I'm done for it. That was what? That was 170 I made on that account. And I'm done. Like, I don't need to think. I don't need to talk. I just go smoke another joint and I keep the day going. Like, it's like, we get into trading for freedom, not to become an expert trader. You know what I'm saying? And that's what and look, imagine I didn't close it at 170 and now I'm like back at, or in drawdown. I'd be so mad at myself. Like, what kind of idiot gets a free $180 in 30 seconds, 10 seconds?
You'd call yourself a bum. You'd be a bum.
I'm not going to lose $180 if I get that in 5-10 seconds. I'm not giving it
But
up.
you didn't read price, Ike.
I know.
Read it.
That's what I'm trying to tell everyone. Now, normally, like I said, normally I'm trading in like 3 to 4 different copy trading, 3 or 4 different accounts. So when you see me scalp a quick 170, in my head, normally I'm really like, okay, I just made a quick 700. You know what I'm saying? So like right now I'm doing one account at a time because we're on stream, but still up what? 240. I'm still up, even just trade because I have 3 different accounts I traded so far, still up like close to $600. And now look, price turned around. So how I'd feel if I was still in this trade. I would be so upset at myself. And the main thing is, don't do any self-harm. Okay, so if you're going to be pissed at yourself, avoid that. I don't mind losing a trade, but I do mind where like I'm not sure if I should do something. Should I do it? Should I not? And then I don't do it, and then it hurts me. Then I get mad at me. Like, I'm not looking for that. So like, and right now, if this shit hits TP, I don't care. I'm done. So, and now I'm going to go to another account and we'll see what else we can find.
But you didn't read price.
And I'm going to go to another account. And we'll see what else we can find. You know? Like, so, and now I'm going to go to another account and we'll see what else we can find. You know? So, and now I'm going to go to another account and we'll see what else we can find. You know? So, and now I'm going to go to another account and we'll see what else we can find. You know?
Dude, I love it. I think this has been an amazing stream. We got to see everybody take some really good trades today. And the one thing I just genuinely cannot get over is, again, like your invalidations, your areas where you're taking profit is we've been so aligned, and you don't even trade statistics, right? We're just looking at the market. We're looking at the same candles, and we're still coming to the same conclusions. Like I don't know if you realize, when we were all the way back here around when you first got on stream, one thing I was waiting on was, do we get out of this range between 762 and 727? And you said that same exact price level. You were like, I'm waiting for 727 to see if we break it or, suck back into it. And then right here, you were like, okay, we're breaking below, and now I'm taking profit. This was where I put my stop in profit, because I was like, dude, if we come back here, I'm clueless. Right now, I don't know. We could continue higher, but this is my invalidation for anything extended or that 3-hour line. So remember, I told you earlier, the two things I care about now is, do we do the apex where we retrace back into 930, or do we do the line? And this pullback was a little bit too much to give me confirmation that I feel confident keeping a trade on, of just making this 3-hour line. So what am I going to do? I'm just going to pay myself. I'm done. Like, just like you're like, oh, this move, this wiggle that I'm trying to take advantage of, that I see hundreds of times, that I execute hundreds of times, it's now showing me signs that I can pay myself, right? So we came to the same conclusion, just different ways. And that's what I love about trading. And that's what we're trying to do here on streams on Mondays.
That's it. Yeah, I think these rejection zones are like holding up too. Like earlier when I was like, oh, I'd get into this trade, except it's near a rejection zone, and then price pulled down. You know what I mean? It's like these rejection zones, when you see candles a bunch of times rejecting, you see these wicks, there's no reason to think it's not going to happen again. Of course, eventually it will not, of course. But there's no reason to think that you're picking that time where it's not going to happen. So anytime I'd see price come here, I'm looking for a possible sell down. And now when I'm seeing price come down here, I'm looking for a possible push up, because that's what's been happening in the past. And what's happening in the past is what I'm going with until something else changes. You know what I mean? But look, price on this same trade that I took out, price, let me drop to the 1 minute. Price ended up, so here's where I got out. There's one candle pretty much. Price came back to this rejection zone, and now what's happening? It's rejecting and heading right back down, right? Like this wouldn't, if we were streaming longer, if I was just at home, I'd probably get into another sell, I'd probably place another sell stop here, anticipating price to come right back down here. Like this is on the 1 minute, but it's like, it's just ping ponging. People don't like barcoding. It's because you're greedy. Barcoding is great. If each candle is 10 to 12 points, how much you need? Go get 6 points 5 times. Like, bro, you know what I'm saying?
I think everybody needs to know where to find this guy. I think if you're a beginner trader, a more experienced trader, like Ike is an amazing individual to put things into perspective. Like, look up ForexIke at Twitter, follow him, listen to him, and listen, like, I don't know how to tell it to you any simpler, but like this dude's got it figured out, right? He's got the simplicity down. He's got the risk profile down. He's got his repeatable edge down, right? Like, and he's got his confidence, and he keeps his stupid simple, right? Everybody heard the acronym KISS, keep it stupid simple, right? He's got it perfected, right? And he also knows his purpose in trading, right? Which is the most important one. He's not trying to sound like a genius or a guru or like he knows what the hell is going on. His confidence comes from, I'm a dumbass, but I can make money in the markets by keeping it simple and just doing the same freaking thing, right? And that's a dude that has true conviction and confidence. So follow him, and then ask yourself, why are you not doing it? You don't have to do it. I see all these questions asking like these detailed freaking questions. How do you do this? You already missed it, right? Like, why aren't you building it yourself, right? Like, go back, watch this video, and answer these questions yourself.
You see how that extra sell stop would have paid. You see what I'm saying? How it went from rejection, from zone to zone. See, went down here, got to this zone, took profit. I could have gotten to a sell stop like what we just spoke about over there, would have taken profit again. And now, what are we expecting? Kind of expecting it to go back up again. Wouldn't be a bad to do a buy stop over here. And again, I only do stop orders because I'm not guessing it's going to turn around. Now it might just keep tanking. But if I, let's say, put a buy stop somewhere like right around here, figuring it gives enough time, stop loss below that, take profit right back in the yellow. This would be an okay buy stop that I would probably have, if let's say it's earlier in the day or whatever it was. But these are the stuff I look at. And then if price closes below here, I would just cancel it.
I love the buy stop thing. I honestly, I never even, because I see how you execute, like I watch your recaps and stuff, but I never actually put it together of like how you engage. Like I watch you say, hey, I took this short or I took this long, but I didn't know it was buy stops. I use join ask and join bid because I like you. I really don't like market orders. I'll get into them every now and then. Like if the breakout is super aggressive and I think I probably won't even get tagged in, but I love setting orders like because it gets you exactly where you're calculating the price to be, like
exactly. And if you're wrong, you don't get activated, right? Like, yeah. So that's the beauty about it is like I said, I might place 14 trades a day, but I end up canceling 10 of them or 11 of them. You know what I'm saying? Just because price doesn't come to where I was looking for, So, but yeah,
I got to jump. I do a nonprofit for veterans, and I got a meeting with a veteran. So, like, it was an honor to hear from you, and absolutely love what you're doing, man. You're welcome here anytime you want, man.
I appreciate that. Thanks again for your service, and yeah, let's be in touch for sure.
Absolutely. I sent you a DM on Twitter, just so you know who I am.
I'll check it out.
All right. Don't
appreciate you, Mick.
All right, later, Austin.
All right, Mickey.
All right, guys. I think it's a good time to wrap it up too. We usually keep these streams going until about 10:30. Now, I will say, on the end of this month, January 26th, that'll be the first day of what we're calling Pack TV. So we're actually going to have a bell-to-bell stream. So Ike, like you are welcome to come back anytime.
Sweet.
We've had several guests that a lot of people like if the crowd likes them, right? Like I think a lot of people really enjoyed watching you trade and listening to how you do things. So you're welcome back here anytime. We love to live trade on Monday with people that.
All right. No, I would love it. All right. We'll be in touch. We always hit each other up. So.
Yeah.
Boom.
All right, guys. All right.
Thanks. And anyone can hit me up.
Drop your socials one more time?
Yeah, it's at ForexIke. I've got a YouTube channel, but I haven't really been steadily streaming, just trying to find like the time and whatever for that. But I'm mainly on X. You can always hit me up there. I'm posting throughout the day, every day. So hit me up anytime. I'm happy to help. Not selling anything, just trying to share my knowledge and try to make sure everyone realizes that we're all idiots together. But to embrace the fact that you're an idiot, you can get paid. If you won't believe it, if you really thought your mom was telling you the truth, you're gonna have a struggle, man. So just believe it. Believe you're an idiot. Keep it simple. Don't think you can do more than you can do, and you'll get paid. It's simple. Just forget your ego. That's the secret, I guess.
Drop your ego, find your kick. Don't look back.
There you go.
Don't change. You're gonna lose still. Remember, we're always gonna lose.
All right.
I appreciate you, man. I will see you on the next stream. Ladies and gentlemen, if you guys got value from this stream, as always, we do this every single Monday, 8:20 a.m. EST, Tuesday through Thursday. We do a very quick and dirty 10-minute live stream where Mickey just comes on and does a very quick, just analysis. If that helps anybody, just see a little bit more of how we trade and analyze price. And then on Fridays, we come back here 8:20 a.m. and do a deep dive on what NQ and what trade ideas we're looking for that day. If you want to join the boot camp, learn how we trade. It's $100. Okay. We don't charge $7 bajillion. We don't make it super expensive. It's a 3-month process, and it shows you exactly how we trade, the tools that we use to give us the ideas, the analysis, and all the in between. And as always, stay grinding on your goals and never, ever, ever let anyone tell you that you can't do something they never done themselves. And I'll see you guys later. Bye, everybody.
Stop me and me